y'all. Those calls.
What up, everybody? Cheers, everybody, huh? Needless to say, we got GameStop down after hours. They reported earnings today, so obviously today's stream brought to you by. Have you seen about the videos? How was she gonna get through this position, huh? You gotta. I'm kidding, right? But yeah, they reported earnings today. Big day. Clearly, the market's immediate reaction here is just a little bit of a sell-off. But if you've seen the stream, you've seen the videos, you know it's like. First of all, just to pull up the VWAP, right? The after, you know how we always talk about the after hours, like what's actually happening? Is it actually just noise? This seems mostly like noise. So if I just pull up the after hours here, we just take a peek. The VWAP was like 687. It's like 5-6%. You know what I mean? Like that's not. It's a heavily shorted company, right? Like you need really, really bad news to be on the right side of that trade. I know I've said that so many times, and so I'm reading this. I'm like, all right, let's see if the shorts get the really bad news that they need. And I'm reading this. I'm like, Now, you get the after hours action, right? And it's like, is this really? We got to see what happens tomorrow. But as far as the short thesis itself, look out. If you see, we'll go through everything today, the balance sheet and everything like that. But the first thing that stuck out to me is, obviously the cash on the books, and then if you include that latest sell-leaseback transaction, they got almost $800 million in cash. What's the market cap? Right before, today it was 475. I'm like, because if you're going to be this short a company, I tweeted a couple things out. If you saw my tweets, like this backdrop is like, I mean, I see the sell-off after, but like the backdrop for this is like super bullish technically and fundamentally, and then you got this short initial reaction. We'll see what it does tomorrow. You never know. I've seen it sell off, and then it bounces the next day. You can't be too concerned with the after-hours stuff, right? We just have a laugh about this, but we'll look into the balance sheet and the press release, and I listened to the conference call too, as I'm sure many of you did as well. So I'll be curious to hear your thoughts. But before we get into that, you know I'm going to need another step. Need a sip today. But even still, mad people talking. Okay, so I'll look into all these comments here. But yeah, so I was curious to see what the move was going to be. But this chart, so let's say it pulls back to 650. Let's just say it could be up tomorrow. It could be green tomorrow, no joke. Or it could be down 20%. What the hell do I know? But 650, isn't this going to be funny? Look at this. If you want to do some magic, artsy, technical analysis, that's right there. It would be right. It would be a retest down to where it broke through resistance. That would be a sick retest, right? It falls down, then bounces from there. But that would make me short. You know, as I say it, like how there humans on the other side of this trade. Roaring Kitty we're long GameStop in the Roaring Kitty portfolio, and I just think like if you're short, you need the short thesis to play out sooner rather than later. Like it needs to happen. It needs to start happening now. Just because GameStop's balance sheet is getting so much stronger, we're getting closer to the console refresh. So anyway. Let's say it does just drop. Let's just say hypothetically it drops to the 650. Like that's kind of a healthy pullback to resistance area. I think, oh no, maybe this is confirmation bias, right? You see me list all those things in my when I was tweeting them out, but then you back out to the weekly, and I'm like, oh, this is if this is the best is this the worst to come? Is a pullback to like 650 or something? That's really not that much. So we're just talking like fun talk here, stock price pullback, blah, blah, blah. But what we got to dig into is, of course, this super important press release. All eyes were on this, right? And I'm sure there were a number of people, maybe even people who tuned to the stream, who are hoping for that quick bounce. I mean, you're always kind of hoping for it with Cohen taking his position, but welcome to the life of being a GameStop investor. If you jumped in hoping for like this short squeeze overnight or the next 2 weeks or something, cheers to you. Welcome to being a GameStop. This is the life. You got to get used to it. And as you know, in all my videos and stuff, right? This is a long-term thesis. My quick take, just a quick take. Oh, I see a whole bunch of people talking here. I'll get to them. Quick take. Long-term thesis is still fully intact. I don't know how you can read this and things falling apart. This doesn't mean GameStop is fully intact. I just mean it could still work out. It's not like it's dead in the water. That's all I mean, is that this is all probabilities, right? There's a probability it can work out over the long term, probability it doesn't work out, blah, 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 blah. right now, that long-term thesis that I'm always talking about in my videos, that's still fully intact. Doesn't mean it works out. But on the downside, I think there's even more downside protection. I spend a long time in my videos about that downside protection. It's such a huge part of my thesis because then you're just like, all right, management, figure it out. Figure out this upside. There's lots of upside opportunity if you can figure it out. And now they have even more cash on the books, and we're that much closer to the console refresh. So I'm like, it's really difficult to be short. And I get the case against being long, but I was saying to someone, I feel more confident. I feel more confident against being short at the current level of short interest of about 100% of the float. But if you adjust those numbers or whatever, you get to it's like 200% of the float if you adjust for the people who are tightly holding the shares, right? So it's like I'm more confident that that's a risky trade than I am that long GameStop is a long trade, and that gives me comfort as a long. I'm just wrapping my brain around it this weekend, and I'm thinking, so you see me toss out these tweets, I'm trying to put myself in the short shoes, and I think, what are you seeing that would give you this level? It's okay to have a short interest against the company. There's legitimate secular risks here. Cohen taking a position didn't change that. But like, are you that confident? Are you that certain? How could you be that certain that it's definitely going to work out and that they can't reinvent themselves in this thriving industry? Like, I'm not that certain of shit. There ain't shit that I'm that confident about. And so I think I'm really nervous if I'm the short. So we'll see what happens tomorrow. This I don't know. Hopefully if you see my videos, you're probably longer term investors. This is noise, right? This is nothing. More important is how they did this quarter and what the outlook was. So we'll get into that as we move through things. But yeah, let me pull this up. We'll work through this. All right, just some quick. What do we got for questions? Hey Hugo. Hey, what's up, Steve? Hey, all right. Cheers, Hugo. Steve. Cheers, Harsh. The earnings were a mess. The guidance for Q3 sounds like a disaster. The management can't answer any questions. All right, so Harsh says the earnings were a mess. The guidance for Q3 sounds like a disaster. The management can't answer any questions that the analysts were asking. All right, I don't fully agree with that. I'm not saying this is all roses of a quarterly conference call or anything like that. But I don't think it was well, you're saying Q3 was a disaster. Yeah, it sounds like they get some headwinds Q3, but this is a long-term thesis that's unfolding here, right? I mean, Q2 was a mess. Q1 was a mess. Like we're getting closer to Q4. So yeah, if you're trading GameStop based on Q3 performance, that's not what I'm doing. Maybe this stuff could get pushed to Q4. Some people holding back. That's not a mess in my eyes. I just think, all right, some Q3 headwinds. But if you're looking out 2 years, that's noise because it all gets accounted for. All right, Harsh. Okay, Harsh, you got a bunch of questions. All right, I got to go through. I'll go through these. But before we get to, I'll revisit your comments, Harsh. But let's just touch on a couple things here, right? So you always care. It's always care. I feel like some people they'll get the press release and they just read like the titles and they move on. A lot of people, hopefully people on the stream, we're reading it, right? But I always think it's really important what they say in the title, how they kick things off, and also what the management team says, what the quote is, what Sherman says in the quarter. That stuff's always important. But yeah, e-commerce sales up 800%. That's sick. SG&A improves, generates operating cash flow. So the big thing for me, and I'm glad they trumpeted here, is that operating cash flow. Now, some of that is due to working capital management, right? But still, what's the market? Yeah, 475. Oh, it's ticking down. 475. And they had operating cash flow 193. If you see the stream, you know how much I care about operating cash flow, right? Because if you can't generate positive operating cash flow, if you're burning cash, I see some people talk about GameStop burning cash because they had a loss on the quarter here. But I think that's not burning cash. You burn cash on the cash flow statement. We'll get to that. But anyway, that's a shit ton of free cash flow. Let's pull it up actually. All right, so you can actually see. Is this it? Oh, this is 6 months. Oh shit, is this 6 months ended? The 10Q only has 6 months. Come on. All right, we'll just get it. It's in the press release. Yeah, right here. So look at this, 193. So I really care about the operating cash flow, right? This is especially critical. It depends on the thesis. So there's all different types of plays. But for the GameStop thesis in particular, you need a shit ton of cash to reinvent yourself, right? I mean, there's no reinventing yourself if you can't afford it, especially if you're struggling, right? There's no guarantee that you can go to capital markets to raise some cash. So it's very important that you remain free cash flow or remain cash flow positive at the very least. And like they somehow found a way during Q2. Remember, we're not necessarily in the throes of the pandemic, but we're coming out of the pandemic. How the hell did they still generate over 190 million in operating cash flow? You know what I mean? Like, even though, yeah, it's a shit ton of it due to the merchandise inventories, right? They're selling off some inventory, right? And so that was part of it, right? But nevertheless, this is the thing: is you need to get to the console refresh. You need to get there, okay? To even play in the game, you need to get there. So if that include, and part of it, you need to sell off some inventory, especially if it's the more questionable inventory where we don't know what the valuation of it is, right? But also just to improve working capital management. You know what I mean? You need to improve inventory turns and stuff. So I mean, this is but even still, it's a huge number. We can pick apart what actual operating cash flow is. But nevertheless, with a company in this type of situation, I don't even care if it's GameStop. I don't care if it's an energy play, right? I got a lot of energy plays. Like if you can find a way to sell some assets, because we have to sell leaseback, right? You find a way to get to whatever your catalyst might be to survive, and then the rest is gravy, right? If you can figure out, you just need to get there. And I don't see how you can read these press releases and see these figures and think, oh, like bankruptcy or stuff, or that they're not even going to have an opportunity to reinvent themselves. That's a ridiculous take. There's going to be an opportunity there. It's not to say they're definitely going to pull it off, but they're going to get there. And like that super bare thesis where they're going to be a zero by year end or something like that, off the table. It's off the table. This is what I mean. They've had tons of levers to pull, and we're seeing them pull, lever pull. They're pulling them, and they're getting to that point. So. These are just I just wanted to touch on a couple of the high level things like that. Cash flow stood out to me. We got the sale leasebacks. Also, there's more cash than this on the books. One of those sale leasebacks didn't close until after the end of the quarter. So I calculate $780 million in cash. What's the book say? 735. This is my type of play. You know what I mean? It's like, this is a common play for like the Roaring Kitty portfolio, right? Because it's like, I got that downside protected, right? There's no guarantee of the upside, but you just have to really have that downside protected. This company has almost $800 million in cash and a market cap of 475. Well, if it does drop tomorrow, it will be even lower. And then it fully covers their debt, and it's in a thriving industry that in theory could like ramp up in a big way over the next 2 years. That's not to say there's not the secular risk. Those are legitimate, right? But I just mean, this is my type of play. It's like, you don't even want to take it. Like, you can't envision them pulling this off. Even if there's a 20% chance of it, you're protected on the downside, right? You'd have to really think. I can't even entertain the idea that they're not going to generate any free cash flows over the 12 months. Like, if people, lots of people are commenting. Like, if people are thinking they're not going to generate any free cash flows over the next 12 months, like, come show your work. You know what I mean? Show your work. I hope as I look at these comments, I hope there's people who disagree with me on here. I really, really hope that. See, there's so many people comment. I don't know what to do. What do I do? Do I start the analysis? Let me start reading the comments. Let's do this. Okay. Harsh, can you explain how the hardware shortages might have affected the revenue? Sure, they were running out of inventory, and they had less inventory to sell, and plus, and so that's part of it. So that's the thing; they still had almost $1 billion in revenue, right? But the exact figures, like I don't know the exact figures. Let me just see. Sorry, just scroll up. Yeah. Oh, that's 26 weeks. Yeah, $940 million, right? So I don't know the exact numbers as to how the hardware shortages might have affected it. I just think all I think is, all right, the hardware shortages impacted it. If you're a super short-term investor or trader or something like that, I don't know how you do it. There should be an explanation there, but I can't. I just think, all right, shortages, so that hurt them this quarter. It could even hurt them potentially next quarter. But it's that long-term thesis that I'm focused on in a quarterly shortage. A shortage of the consoles or even games or whatever, it's just, I view it as temporary. It's not a long-term thing necessarily. And the guy, it looks like there could be some Q3 headwinds, but there's a longer term thesis. So there's going to be twice as many games coming out with this console refresh. They could crush it in Q4 of this year, in Q1 thereafter. You know what I mean? I'm not too concerned about Q3, but if this was a short-term trade for you, I don't know. Can you give us more insights in your pre-owned resale bit? Oh, the question. Yeah, so I will say, like the conference call, I feel like there could be more in the conference calls. I don't know if other people are going to say this too, but like I read the press release. We all read the press release, and then I listen to the conference call. And as someone long GameStop, I'm like, you always want a little bit more. And I did want a little bit more. I want a little bit more into, you see in my videos, I'm always talking about reinventing themselves and transforming shit and everything like that. Like, I'm like perpetually wanting more on that front. And I like to think there's a reason we don't always get it, but I don't know. A little bit more transparency would be nice. I mean, the consoles, I keep on saying this, we're only a couple months away, which is both a good and it's like a good thing because we're right there, this upcoming catalyst. But it's like we need more of a plan. But at the same time, they're always testing stuff, they're experimenting with stuff, and I can respect. You don't want to nail yourself down too much to any particular pathway. Right now, they're very clearly focusing on like improving the omni-channel experience. Do I have that up, by the way? Oh yeah. Oh, I have it up. I pulled this up. I'm like, yep. This is great that I have this. They're very clearly focusing on the first two pillars. So you saw this in that GameStop video, if you saw it. Like, they're very clearly focused on optimizing the core business in this digital ecosystem, right? They need to have this good to go for the console refresh. Like, you can't be messing around. Like, there was mention of same-day delivery, which is terrific. There's mention of this new app. Of course, it's 2020. I mean, you need to have an app, right? But a real sick app, you know what I mean? You ever use an app? Sometimes I'll use an app, I'll be like, damn. That's a sick ass app. It's real seamless. Like, yeah, I want to buy something else, right? So like, I mean, that's standard stuff that you should have. But we're coming up to the console, right? They need to get this in order ASAP, right? And remember, this management team has only been in place now, looking at like not even 18 months. It hasn't even been a year and a half. But so even still, I say that, but I still always want more on like these two pillars, right? Establish the social and cultural hub of gaming, vendor partnerships. I'm always looking for more. When I say I want more, it's these things, but they do need to take care of these first two things. And so I guess that's what I said. I was hoping for a little bit more. And then the Q&A too. So I would also like, it'd be nice to have some better questions, right? I don't know if someone says this. I didn't get through all the questions yet. But I always listen to these conference calls. I'm like, those are your questions? Come on, get me on the call. I'll ask you some damn questions. Or any of the folks on this call, I'm sure you, like if you're tuning in the stream and you're following GameStop, we know the questions to ask. You know what I mean? But these analysts, sometimes they're writing their own research reports. I don't really know what's going on there. But so I was hoping for a little bit more. I was hoping for better questions, more so than the answers. I wasn't too surprised by some of the answers by management. They did their best, and they're not going to give guidance on some of these things. It's real tough to give guidance in this environment. But you know what I mean? Like, and especially they gave the Q3 guidance, which I mean, it's a little bit of headwinds. But in Q4 it's real messy. It's really tough to forecast that. So if you're thinking of a long-term play, put yourself in their shoes. And you're talking to long-term investors. What are you going to do? You can't get into specifics and stuff like that. But anyway, let me keep going. Last quarter, you're doing the Q&A. Last quarter, you got a full year to be positive. Right, COVID, mobile app. Oh, sorry. I think you copy and pasted the quick Q&A, Harsh. Okay. What the hell do you know then? This has to be the word. I don't know if I agree with this, Harsh. He's saying that they don't have insights into their own business and how it functions. I don't know if I totally agree with that. I think you're like me, where you just were hoping for a bit more information on this stuff, and it's safe to say they're more dialed into the intricacies of the business itself than we are. We're just too removed. But I get what you're saying. That you're just hoping for a little bit more and more clarity, but even if you get it, I'm not so sure that like the stock price pops or something like that. For the stock price to pop, like we have been saying on the stream, you need something substantive, like a major like share buybacks or something with Cohen or some major strategic partnership. That was really the only way you're gonna. Remember, this is some of the heaviest bearish sentiment that I've ever seen. Maybe you've ever seen as well. Have you? I mean, 100% short interest. And remember, like I said, it could be like 150, 200% short interest when you start going through the numbers. But we'll just say 100%, right? Like, that's super, super heavy bearish sentiment. The only way to get out from underneath that is you need something, bam, you need to drop some shit on people, right? Like, oh, I wasn't expecting that. And really, the only way you could blindside, and I'm not saying that they should have done this. I'm just saying, like, it's just really tough to satisfy everybody. And so, most importantly, you satisfy the long-term thinkers, and just like, we're sticking to our game plan. This is the game plan. But you wouldn't need to share buybacks, or some partnership, and no mention of Cohen or anything like that. But what the hell? We don't even know the management knows anything that's going on there, right? But I mean, I was hoping for more insight there, more strategic type stuff, and we didn't quite get it. But it could be just stuff. It's still kind of in the works. So, but I feel you, Harsh. I see where you're coming from. But I don't think it's fair to criticize them too harshly. I said this in my videos. I do feel as though they've been doing a good job. Remember, look at this balance, the strength of this balance sheet going into the console. We're right here. The console, the countdown is on. It's here. And look what they've done. Look what they've accomplished. I care about this balance. Like, you know what I mean? Like, the downside protection has been improving. There's a greater margin of safety. That's what I wanted the management team to do. And now we're getting to the place of, okay, now, and let's say they take care of the app. And if you get same day delivery too, that can be a competitive advantage for a brick and mortar store to have that, to offer that as well. If they pull that, if they pull that off, that's huge. I don't know if anyone, and then you can even have like sorry, I'm rambling now. I apologize. But you can have like an Amazon Prime equivalent for game, like a brick and mortar store dedicated to this, and then you can have a subscription and all this stuff. I don't want to. Well, there's plenty of time for that. How many hours do we got? It's only 7:20. We're doing good. Okay, there's plenty of discussions to be had. But most importantly, so there's all these opportunities, right? The opportunities abound. What I've been most concerned with, and maybe many value investors who are tuning in feel this way, it's like get us to the show. Get us to the show, and then but along the way, be testing stuff, have some ideas. And yeah, it would be nice. It's September now. I've been saying this. It would be nice to have more of a game plan right now. And then they had the pandemic, right? That kind of interrupted some things too for a lot of retailers, not just GameStop. But I'm satisfied with where we are on the downside. I'm so focused on the down. Everyone wants to focus on the upside. You know what I mean? It's important too. It's important for both the bearish argument and the bullish argument to consider the upside, right? It's hugely, hugely important. But from the value investing perspective, which is what I'm most focused on and assessing management's success so far, and they've done a good job. I think they've done a good job. But I'm not saying they're perfect, right? And I've said in the video, there's things I felt they could have done better, including maybe some more clarity on the conference calls. You know what I mean? I think I'm probably, but I don't know. I don't know. I heard the guy Bank of America told, this is Hugo. What's up, Hugo? I heard that the guy Bank of America told them that the problem of Apple with Fortnite could help GameStop if they know how to get into it. Yeah, that was interesting, right? That was they didn't touch on it much, right? They kind of I can't wait to reread the transcript. This is all from memory for all of us, right? Because I don't think there's a transcript out right now. Oh, maybe there's an audio file up, but yeah, it was the last question. Was it the last question? And they didn't dive too deep into it, but yeah, there could be a potential opportunity there. But I bet I bet Hugo is just too soon to dive into that right now. Excuse me. They need to, like, this is somewhat new, somewhat recent. Maybe there's no strategic plan right now, but something maybe they dive deeper into. But indeed, I know what you're getting at, Hugo, and that's what I mean is, like, we talk about so important, the narrative, right? It's so important with this narrative, with this, look at this sentiment. You know what I mean? Back out on this chart. Look at this shit. Look at this. This isn't even dividend adjusted. Look at, you got this, right? And then this chart. What I'm focusing on, this chart. We're from $50 down in the gutter down to $4, right? And then you pile the short interest on here. This is super. People see this, they see the short interest, and they're really negative on the company, right? They see the year-over-year comps declining. The big declines, but we got a catalyst upcoming, right? So you don't look too much into that. But like, it's really important to change this narrative. You got to change the sentiment around that. And the part of the way you do that is by, I'm talking about that upside. Like, here's what we're gonna do, and that's the type of stuff that I'd like more of on the call that was kind of missing. Is change that sentiment, change the narrative, talk about this upside. But it's like they're so focused on these first couple pillars. It's almost like they're just they're getting to the console refresh. But so I wish we had more of that. But like you mentioned that question, that's an opportunity to get the discussion going in that front. They need this is why I've been saying on the stream too. This is why Cohen's involvement is important, right? Because you see that, and then I'm like, when we saw Cohen get involved, I'm like, this is the type of guy. And you remember his website, right? Look at this shit. You got a website like this and all his success, and you read all these articles about him. People care what this guy does. They care what he says. Maybe they need a little bit of a salesmanship of the company, salesmanship of the angle. I'm not saying that that's necessarily in their best interest or anything like that. But you listen to this conference call, I'm like, it's a little bit more of the same in that regard. It's like, let's get people jazzed up. You know what I mean? This is a sick opportunity to have here, even if it's going to take you a couple quarters to get into it. Let's get the discussion going. So. I did hear that question, Hugo, but there was plenty of opportunity in the conference call to talk about this stuff. But I think part of it is, I think they don't want to nail themselves down. I'm speculating here. I have no idea. I think they just don't want to nail themselves down to one particular path. But even still, right? The gaming's sick. You know what I mean? It's a huge industry. I don't know. Harsh. The only good thing about this is that we now most likely Cohen will buy more. We'll get another 13D. Maybe he might add more. He didn't add any after hours today, did he? Oh, we're over here. Okay, just check it. Yeah, he might. Let's get to keep an eye on this. Let's see if he adds, or really anyone adds, right? We also saw Permit trim their position slightly. It was so small. It was so small that it could have just been rebalancing their position. GameStop, we'll get into that. GameStop's a huge position of Permit's portfolio. It was like 18% of the total portfolio, but they have one position that's gigantic. So it may have just been trimming, but even still, trimming before earnings, I was like, really? Okay. But anyway, so we definitely got to watch the filings these next couple weeks, just see if anything happens. But really, no mention of strategic type stuff. Forget Cohen just for a minute. Just not much of anything on that front. So it's like, all right, now we kind of got to keep watching shit, see what happens. Oh, yeah, what is this WAP? See, 687. What are we at right now? Just curious. 650. But you see this? The WAP, this is the volume weighted average price, 687. It's really not that. Really, tomorrow, we got to see what it does tomorrow. I am super curious, even though I don't care about the short-term moves, it doesn't matter. I care more about how this quarter did, right? As hopefully most of you do as well. Unless you're a short-term trader, you're probably disappointed. You probably see this, you're like, oh, what a waste this was, right? Welcome to the GameStop show, my friends. But I'm super curious for the technical perspective, right? You know, I'm talking about the technicals, but like, is this really gonna just retest? You know, everything's a test, right? Everything's an experiment. Is this shit really gonna retest this previous resistance? Because I'm gonna die laughing if it does. It's gonna be hilarious. Okay. Where was I going with this? Talk about the questions. Get back to the questions. Sorry. Ryan King, I'm a layman on investing, but there is definitely a way GameStop can reinvent itself. Cheers, Ryan King. Cheers. That's right. That's Ryan King. Let me tell you something. You're already one step ahead of many folks, I think, because I think some people are struggling to even imagine that GameStop can reinvent themselves, right? No one's saying that's definitely going to happen, but you only get... Wait, do I have the... what is it? What is it right now? Highshortinterest.com? What is it right now? It's roughly 102%. You only get this when no one can entertain this possibility, right? And it's like, no one... No, it's not that no one, right? Some people can. Hyperbole. To get the point across, right? And but like... You can't even entertain the possibility. You can't assign a 10% probability to this, that they become like the go-to, the premier venue for gaming experiences. Like, you can't even... So Ryan King, you're new to investing, but believe me, you got an edge over some folks who can't get out from underneath themselves. And this is important because everyone wants investing to be black and white. They want it to be black and white. GameStop is definitely going to be dead. GameStop is definitely going to reinvent itself and be a $10 billion company. It's going to 100, right? Unfortunately, that's not how life works. That ain't how shit works. There's gray area, and this is where investing comes in, right? Maybe this is obvious, but truly, it needs to be resaid. You do your best to assign probabilities to different outcomes, and you analyze the data, analyze the reports, analyze everything as best you can, and you assign probabilities to it and come up with a weighted average probability model. And like, everyone's assigning a 0%, like a negative. I've been joking. They've been assigning a negative 20% probability to the fact they reinvent themselves, right? It's insane. So anyway, Ryan, I'm glad you can at least think about that. Keep an open mind about this stuff because it's important. Hugo, we have this month the pre-owned consoles. I don't know what you mean there, Hugo. But yeah, but in general, this pre-owned, like being like when people are gonna upgrade to the new consoles, many people are gonna trade in their previous consoles, right? Do many people know that? And who's the go-to retailer for trading in your video game stuff? It's GameStop. And this is important, and I mentioned this in the video because it's important. It's going to drive traffic, and so you see, I can get my consoles anywhere. I can get my games anywhere. It's important to be the dedicated gamer. You're going to have maybe parents buying their children games or people who just want to get exclusive bundles. Like GameStop often has sick bundles for like Nintendo type stuff, and there's the new Switch coming out. Like, I'm rambling now, but I'm like, and just to have, there's a benefit to being dedicated to gaming on that front. But but in particular, pre-owned. People are going to trade in their shit. They're going to go to GameStop to do so. And remember, what is it? 60 million members, Rewards Plus member. Or what is it? Oh, geez, I forget now. The Rewards members. Jordan, hey, what's up, Jordan? Q3 software slate is very weak. That's all they said. Very true. Next quarter probably mildly weaker. Yeah, the quarterly stuff. We'd be talking about the Q3 stuff. I know some people might be concerned about that. I'm not really. This was supposed to be a shitty year. Really, I know this is. Maybe, I hope you don't think this is confirmation bias, but that we're here with this balance sheet already, given what has transpired this past year, this has been, in my opinion, a decent year. These are terrible. These were intended. It was going to be terrible year-over-year comps, right? And if I scroll back up, what was it? It was like 12% or something once adjusted for their stores were closed. You know what I mean? Comp store sales declined 27% or 13%, adjusting for fewer store operating days due to store closures. Like, this is big. Like, it should have been way worse than this, right? So it's a little bit of a silver lining that gaming's thriving as much as it is. So anyway, these somewhat shitty months where it's a little bit rocky and everything like that, it doesn't faze me that well because it's lumpy. This GameStop industry is inherently lumpy. That's how it works. And you kind of need to be inured to it. You got to be numb to it. That's how this works. And so I'm not really too concerned about this quarterly stuff. And things get pushed, titles get pushed. And also, this is the earliest they ever announced the consoles and everything. So everything is delayed. So you can't be too concerned with the intra-quarter type stuff. Steve, with you, Roaring Kitty, on the long-term thesis intact. Glad to see this. Oh, I'm with you, Roaring Kitty, on the Steve Mazzini. I'm with you, Roaring Kitty, on the long-term thesis intact. Glad to see the sale leaseback and strong free cash flow. Bummer they couldn't even buy 1 million in shares. Do you think there is restriction? Shit. So I know you hear me talking about. I didn't think the share repurchases were likely, but I was hoping for it, right? For two reasons. Number one, is discount prices, right? They may never get back. I know some people are forecasting price is gonna drop back down to like this area right here. I'm not so sure about that. Check out my tweets for why I don't think it's necessarily gonna pull all the back. This wasn't a bad enough quarter for it to sell off hard. That's why I'm kind of curious what it does tomorrow. Because if you were this short, you needed a worse quarter, in my opinion. But I think a lot of people were trading GameStop for this squeeze opportunity. Ryan Cohen, blah, blah, blah. I think a lot of people got in for the short term, and then they didn't get what they wanted, so they're selling off. But if you're short and or you're even hoping for a big pullback for more share purchases, I'm not so sure you're going to get it. But so that was why we're hoping for the share purchase. Number one, for the discount prices, but also for some squeeze potential. Like I said, that was one of the few things that they could do, drop it on people. But yeah, there was but yeah, they didn't do. So yeah, I don't know about a restriction. I've been saying that, Steve. Like, is there something I don't know or that we don't know that they can't do it? I didn't think so, but I don't know. It's conceivable. It's conceivable. And now there's it's also conceivable. I don't want to keep harping on these share buybacks too much because I myself don't necessarily think they're likely, but I just think it would be hugely impactful. It would be immediately accretive to the value. That's why I think it's important to talk about them. But like, it's possible they bought in August where there was a ton of volume following Cohen, right? I mean, I'm not saying that they did this, but like Ryan, we need to entertain the possibility, right? Can we just entertain it? Check out this volume over the past week. Look at this, 37, 23, 13, 14. So I'm not saying, I still don't think it was likely, but they could have just done this shit in August. And this was part of some sort of plan, like as soon as liquidity picks up or anything like that, or there's more volume picks up, and then they could have already done it. And maybe that was part of the plan. I have no idea. We know that they needed to get that bond exchange behind them. So I do think there was a restriction up until that bond exchange was done. But it was done in the first week of July or the second week in July. So they had a couple weeks. But I'll just point out, there was not much volume in July. So check this shit. I mean, look at how little they would. That's what I mean. So you heard me mention on the stream, like I was buying in July because I couldn't. There was no volume. You saw it closed below 4 a couple times. It was so little volume that even if they wanted to do the buybacks, maybe it would have been difficult. But but even none, right? So to Steve's point, they bought back none. I'm like, they bought back nothing. You didn't buy back anything in July, so I don't know. We shouldn't rule it out, but yeah, it's disappointing. But it's disappointing. It wasn't likely. From what I could tell, it wasn't likely. But yeah, as someone long GameStop, you kind of hope it happens. Maybe the opportunity is. By the way. Let's say it falls to 650 tomorrow. It doesn't matter. Even let's say it stays at 735. Who gives a shit? Even right now, I still believe GameStop is undervalued, right? So like these are still cheap prices to buy back stock of GameStop. Like, so they haven't missed. They've missed maybe the low, right? But come on, we're value investors, right? You think we're gonna buy the low? You think we're gonna nail the low? Shit. Do we ever do that? No. I mean, I don't, right? All you can do is really average in, average out, and we're only what is this? Maybe 20% higher than what their average buyback price was last year. That ain't shit. Get the graphing calculators out. Where's my calculator? What is it? Let's say it's at 650, right? 650. What? I don't know. 520. It's only 25% higher than it was when they did the buybacks last year. That ain't shit. If you think that there's tremendous upside, which hopefully this management team does, there's still plenty of opportunity to do the buybacks. I'm just saying. But indeed, at the discount prices would have been best. Okay. Oh, shit. I know there's so many comments. I'll do my best. Sorry, what happens is I start responding, then I ramble, right? I got so much shit to say. What is it, 7:35? Damn. Oh, shit. I went too far. Okay. Hugo, I think Curtis Wolf and Paul Evans have improved the cash management. Well, they were. I think management team was already doing a good job of that. Maybe they had a positive impact. I have no idea, but I think the management team was doing a good job. Ming, honestly, why didn't they buy back stocks? I'm not sure, Ming. That's hugely disappointing. I wouldn't say hugely disappointed. It's disappointing because if you're long GameStop, that it would increase value per share, assuming the value of GameStop is higher than the prevailing stock price, right? That's when you buy back shares, when the value of the company, when it's trading at a sizable discount to the value of the company. So as long as that's in play, then it's worthwhile to buy. I mean, the question for many people is GameStop's value higher than the prevailing stock price? Or is some people saying zero, right? I mean, I think that's ridiculous. I don't know how you look at this balance sheet and think it's a zero. They could pay out a dividend. No, I'm not saying. I'm just saying technically it's a. But so that's the question mark. What is the fair value of GameStop? I personally believe it's quite a bit higher than the prevailing price. So which means it's still a good time to buy back shares. So it's only mildly disappointing in that it would have been nice. But the game is early. The GameStop is early. Oh, geez, terrible. So only somewhat disappointing. Hugo, I think they were expecting that the Q2 make the share go down, but the buy of Ryan Cohen make the price go up, and they couldn't buy back shares. Shit, Hugo, maybe. I know. Maybe they would think. Maybe they thought that. Hey, are we getting the stock price to rise? Cirk. Did we just get it? I'm kidding, right? Yeah, maybe. Maybe they thought that they was gonna sell off on this, and Ryan Cohen screwed shit up, right? Maybe, I don't know. Part of me wonders if some of this is like, not that they're sandbagging on with some grand plan or something, but they're like, all right, let's just drag our feet on like hugely positive. Now I'm not so sure that's the case, but like maybe Hugo, maybe they were like, we get the bond exchange behind us, then we're gonna drop quarterly earnings, the blackout period's gonna end, then they're gonna boom, 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 eat up all the shares. Maybe, I don't know. And then Ryan Cohen got involved, and then it got bid up. But that'd be a bummer if that was the plan. Shit. Yeah, Ming's laughing at that too, right? Hey, what's up? Daily cheers, mate. Shorts needed things to be a lot worse than it is. Only reason stock is down after hours is because of a slight miss. The immediate reaction, tons of cash on hand, only up from here, in my opinion. Well, I agree with you, Daily. Really, we shouldn't be too worried about the after hours action. This is noise. This is nothing. If I say this, but I feel like let's refresh this. Here's the after hours action. The VWAP, what are we at? 686 right now. This is a nothing move. If you're long, if you're a trader, you're frustrated by this perhaps because you were hoping for a squeeze or something. So you didn't get it. Those people sell, but like it's like you needed more than this. Can you imagine being short? I can't imagine being on the other side of the street. I can't imagine being short. I mean, I can imagine not being long GameStop. I get it. I can even because if you're short, you kind of need stuff to happen. You don't. What are you gonna? You betting on like bankruptcy 10 years down the line, 5 years down the line, 3 years down the line? Like you need stuff to happen in a somewhat of a timely fashion, right? That timing's important. I'll talk about that sometimes during the streams. But like you didn't get it. I agree with you, Daily. You needed a lot worse than what you got. This is my take. But what the hell do I know? I feel like I've been taking crazy pills for a year now in the stock. Like I keep seeing positive fundamental developments, and then the stock price don't give a shit with Roaring Kitty. Forget Roaring Kitty. Who gives a shit? And then I think. I don't so much take issue, or I don't think it's crazy to be short GameStop. But how do you be short with this backdrop of everything that I mentioned in my tweets? But 100% short interest. You know what I mean? That's what I like. I don't understand. How could you ever? I've never been this confident. Have you ever been? Has anyone ever been this confident in a position? Like in the inverse, maybe on the long side. Like maybe people respond. I apologize. I see all these comments, but like. I'm never this confident. I'm never this confident about a position on the short side that you would bet this much. Maybe never. Oh, I hate to use absolutes. I won't say never, but it is very rare to see in the market this level of conviction on a particular play. Again, I don't want to say never, but like it's very uncommon. And when I mentioned this in one of my tweets, when I juxtapose my bullishness and like Burry's and presumably Cohen's, because I don't know, Cohen hasn't said anything about that. But when you juxtapose it with this, I don't understand. I don't understand. That's why I make those joke tweets. I'm like, beep, beep, boop, 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 boop. I'm trying to talk to the robots because the humans out there, how could you be short? How could you continue? Could you keep this short on? Maybe up to, I keep on saying like 20, 30, 40% short interest, maybe because of the secular risks. But 120%? I keep on thinking it's like robots that don't know what they're doing and like that they're focused on the road. I mean, so far it's not like it's worked out. I mean, I'm not taking victory laps. I just can't. I'm having a hard time understanding this level of conviction. And I mean, if you, but I guess to unwind it, let's see what the price action. This is what I'm kind of curious about this price action because I'm of the opinion. Here's my thesis on this short shit. Is that I think a good chunk of this is weak hands. Like it's like some automated. Whether it's just automated. First of all, this is above my pay grade. I don't know shit about like automated trading, algorithms, all this stuff. I just think there could be some type of trading model that's looking at the different metrics of GameStop. And I've mentioned how Burry's talked about people misinterpreting the new financial statements because of the leases and stuff. I don't understand how people could do that. But let's say they are, and the GameStop looks more indebted, and then they see the, I don't know. There's so many different metrics that you could home in on and get the wrong idea. You get the wrong story if you're analyzing GameStop, and it causes you to short more. But if you're a rational human being, if you're just a reasonable human being, and you look at this stuff, you think, oh yeah, well yeah, it might not work out, but I'm not 100% sure, 150% sure, whatever it is. Like I just can't imagine. I can't put myself in this. This is why I want more like really negative people on GameStop to chat about. Hopefully more people talk about it. following this release. If GameStop sells off, we'll get more bears like taking victory laps. You know what I mean? Like, oh, we knew even though the chart looks terrific, if it only pulls back to 650, that's great news. But like I just can't, I'm having a hard time putting myself in the human being who sees this setup and thinks, you know what? Yeah. That's a good trade. Yeah, let me keep on shorting this shit more and more. I think, oh no, it's just really risky. Sorry, I don't even remember what Daly was saying. I agree. So my what I was looking for in this press release, because really this short interest is kind of the story. How are not more people talking about this, by the way? Doesn't it kind of seem like there should be more articles about this? Like, especially with Cohen, even though I didn't expect Cohen to be talking about it too much right now, I thought some of these websites were going to talk about this more, that this is more of a story, but no one seems to give a shit. And so I feel like, and Scott Preston said this in his article back in February, that like people are sleeping on this. Both the Bulls and the Bears, like people have fallen asleep on this. And that's why I was curious about this quarterly too, because they could have totally fallen asleep. And if they did announce something amazing on this quarter, people could have been caught off guard. They still might. But I'm surprised that there's not more people talking about this stuff. But anyway, when I was reading this press release, I'm like, all right, let's see what the shorts got. Let's see what they got. And then I see the cash balance of 735 plus the sale leaseback 800 million. I'm like, 800 million. All right, so the shorts are crazy. I think no, the shorts aren't crazy, but this short position, and so, but I can't find it. Not everything was gravy, right? The gross margin was down a little bit, and I mean there was a loss, even though I'm focused more on the cash flow statement. But the comps weren't as bad, and I don't know. I didn't see it that would substantiate a much larger move than this. But anyway, let me keep moving. Ming, I have a question for y'all. What do you think about Microsoft Digital S at $299? Oh, I'm curious about people's take on Digital S too. Well, what else did you say? I'm worried about digital acceleration if Sony has to match their digital-only console the same price. Oh, did Sony announce today? I know there was a potential. There was a rumor they were going to announce. Hey, I wasn't too impressed with that Digital S. Did anyone have any thoughts on that? That looked kind of. If you're a serious gamer, you ain't getting the S, right? You can't. I mean, you're gonna sacrifice like performance type shit, and then you don't even have 4K. I feel like, not that this is a huge part of the GameStop thesis, but I was talking to some of my friends too, and they were like, "Oh yeah, we're getting the physical console," even though they might still download games, right? You at least have the option. But I wasn't too impressed. We'll see what Sony does on that price point. They were kind of playing a game of chicken. We talked about that, so we'll see what happens from here. Okay, Hugo said they will sell the S at $299, but I play games too, and there's many people that still love discs. Yep, we know. Yep, a lot of people still love discs. In fact, GameStop themselves has said millions of people still love discs, right? Jordan said, great point. No question about expanding Tulsa or... Oh, shit. Did I just jump ahead? Oh, I'm way behind. All right, who cares? Jordan says, who cares about the digital only? Some casual will buy bigger gaming pie, but if you resell 4 games, the better console is the clear choice. Yeah, that's right. So here's some people have definitely been talking about this, but like with the games getting more expensive, right? Like, aren't there going to be more people who need to sell back or want to sell back their games, trade in their games? I feel like that's part of it. Again, it's important. Like, I think that there's a case to be made. There's physical, and I'm glad they said this on the conference call too. They were like, physical discs, like we're going the way of digital, but physical discs are here. I forget the exact wording, but they were like, yeah, it's going to be here for a couple of years. So it's good for them to say that, because like I feel like we all mostly agree with this, right? Like it's going to stick around here. And only the really bearish of the bears and maybe the short interest think that no one's going to be buying discs. They're still going to be buying discs, and GameStop's going to be in a good position to continue. Remember, we got the downside. It's more just generating enough free cash flow to find a way to reinvent themselves, and so I think they're in a good spot there. Hugo said, I really want them to take advantage of the problem of Apple versus Fortnite. Yeah, so that's something they could talk about more. Jordan said, great point. No question about expanding Tulsa or esports or social hub. Questions were weak. I know, yeah. So Jordan, I'm sorry, I'm catching up to folks, but I was saying that too. Like, people couldn't criticize management, but I'm like, can you get some better questions on there? Like some better, come on, analysts, right? They have their own, they're on the job, right? They got to write their reports or whatever they're doing. So that's sometimes why they don't ask questions that you and I might ask. But still, you're like, come on, just ask a different question. I feel like the questions have always been. There's been a couple of good questions over the past year or so, but like most of them, I haven't been too impressed. Jordan said the fact 2 of the analysts asked about margin contraction was sad. Weaker software sales and more hardware as a percentage explain more margin. Can't believe they didn't know that. Why was that asked twice? I agree with you, Jordan. It's like, I love how, who was it? Sherman was like, or Bell. He was like, no, there's nothing more to it. That's it. it was just the shift in what was sold. Do you need more to it? And plus, this ties back to the shortage of the consoles, right? That's the thing. I think that was what was confusing people, because the shortage of the consoles, they were like, what the shift was. Honestly, I don't know the breakdown off the top of my head. I didn't dig too much into that. Are those figures here? What the breakdown was for? I don't feel like doing it right now. I want to get to your question, but whatever that breakdown was of the consoles are lower margin, but the consoles get people in the door. That's important, right? For the GameStop thesis, like reinventing themselves, blah blah blah. People will come in to buy the consoles, buy bundles, and so forth. So anyway, I'm not too good. Do I have it open by any chance? It'd be nice. I don't have my. I'll pull up my fundamentals while I'm going through these questions. But let me get this. Let me pull up the ad hoc. We'll pull up I got GameStop in there somewhere. So but as that's loading, hey, I got it right there. Shit, it just needs to load. I'm not who's going to be, because I talk about the quarterly performance. Who cares about a quarterly margin contraction, right? With all this shit going on? They generated positive cash flow. This other stuff is gravy. But anyway, they had been improving year over year. Gross margin. I included this in one of the videos. Like gross margin, it was up like 110 bips year over year. You get this declining business model, rapidly declining revenues in this year, and gross margin was up. I'm like, that's sick. It's when you have revenues down and gross margin down, I started to get nervous. Anyway, my point just being, they were doing a good job of managing costs despite the revenue accelerating to the downside. They were doing a good job, but then this quarter, I don't know the full. I gotta review everything to understand that gross margin kind of a little bit better. But it's less of a concern because they had done such a good job before. I mentioned this in the video. Like it was good up till this point. So if you're gonna have, like I said, it's lumpy. It's lumpy on the top line, on the revenue side of things, on the bottom line, on the profitability, and in the middle too, on the gross profits. It's lumpy. That's how it is. That's the nature of it. Sometimes you're going to have fatter profits when there's a lot of trading going on, by the way, which is coming up. You see all this cash flow that you're generating, like there's going to be, I suspect, there's going to be even more free cash flow generated, yes, still because of the new consoles and everything like that, but there's going to be a shit ton of people trading in shit in November and December, January, and GameStop makes a lot. They have fatter margins on those trade-ins, so I just expect that to pick up even more. Ming said GameStop should have pumped up this quarter, squeezed the short to the moon, then issue more stocks to save $50 and get $1 billion or $2 billion. No point in building up this cash position. Do nothing. Well, I don't know about that, Ming. So hold on. Sorry, it's loading on me. So one thing I'll say, and I think I mentioned this on one of the streams, it's a good, I don't know, you say pump up, the connotation of pump up is like, it's almost like it's temporary, right? But like, I'll just say this, and this is why I was a little bit weird of people critiquing those investors who have been long GameStop and trying to get board seats, right? Who they were trying to say do share buybacks, blah, blah, blah. But like a higher share price is a good thing. It's a good thing. Yes, you don't want it to be temporary, but right now, like this was good that GameStop was already up, where are we? Like at $7 before these earnings. Now it pulls back, whatever. But like a higher share price is good for the narrative. And you might say, who cares about the narrative, right? But then it success begets success. I was saying that reflexivity, right? Like the stock price goes up, people are talking about, oh, this is a good thing. There's GameStop's looking up. They're turning themselves around, and then people start bidding up the price. And I highly, highly doubt they would actually issue shares, Ming. Remember, they got $800 million in cash right now. But your point still stands. That like, I wish they would do a better job of talking about the narrative and stuff, just to get. I mean, people want the share price to rise so they can make money. I get that, right? But I'm just trying to set aside making money from an investment standpoint for just a moment. But if you can get your share price to rise for your company, it's a good thing because, like, of all this stuff, it just can help change that narrative. It can help people get interested. It's important too for a company like GameStop to get the interest of like institutions, of not just hedge funds, right? But like mutual funds and endowments and all this. And to do that, they need to change the narrative. You need to change that belief that GameStop's just going to make a couple of years of free cash flow or whatever it is and do whatever they're going to do. And it needs to be like not that they're going to the moon, but like this is where we're going. This is what we're going to do. We're going to crush it. We're in a sick industry, and we're going to test this, test that. I know I've already said how they probably don't want to nail themselves down, but you know what I mean? Like, say some stuff to get the price firmer. You know what I mean? I don't mean like a temporary squeeze or anything like that. I mean just like a rising price will help you get support, and then it kind of struggles. But it's important to remember, It's not about the. This is the thing, but now we're like 3 or 4 quarters into this. But they've been dealing with a lot of shit with the pandemic. That's the thing. It's kind of impacted my outlook on some of these things because it kind of changes things. Management's doing their best to navigate this, unprecedented situation, right? But nevertheless, I just think would have been nice to like talk up the upside, even without giving too much in the way of specifics, because you get a firmer price and it sticks around. This is why it's good that the chart looks good. I still think it's going to catch people's attention. I was actually pretty surprised how little chatter there was about this weekend. You saw me mention, what was it, Friday on Twitter. I'm like, people are going to see this and they're going to see that and they're going to see this. And like, no one gives a shit. No one cares. No one cares. For better or worse. I'm just saying, no one cares right now. And that kind of gave me some, I was kind of like, I'm like, all right, so maybe this is the really early stages. No one gives a shit yet. But it's good to have some positive momentum. It can help. It can, like, I'll frequently pull up the Tesla chart, right? Oh yeah, Tesla's pulling back. Oh yeah, it bounced back today. But like, Tesla's a good example. I have no idea what the long-term future is for Tesla or anything like that. But talk about Elon Musk. This guy might will. I have no idea. He may will his company. He may will it to survive and thrive. I have no idea. You know what I mean? It's important. Like, he's getting out there. He's completely altered the way people perceive his company. I'm not saying that GameStop could even do something like this or anything like that. I just mean there's a lot of power in a proper narrative. And Tesla's a good example of this. Of like so many times people have been bet against and continue to bet against this company. And maybe it too is a zero. I'm voicing no opinion on Tesla. My point just being, we know how vocal Elon Musk is about his company, and just all over the place, right? And just positive momentum. People love the company and the stock and stuff like that. And like, look at this chart. I mean, it's just incredible. But this is why narratives are important. It's a really good example of getting that narrative going, and then it just insists upon itself. And all the way up, he's issuing shares. I know that's what Ming was getting at. Issue shares on the way up, but like, it could be a good thing. This is what I mean. He may will it to happen, but because he got the stock price higher, because he was able to issue at super high prices and they just did $5 billion. Like, maybe they do it. Maybe he successfully gets this to work. I have no idea. But when I think about getting a narrative going, I do think of Tesla. Ming, talk about Ming also said, no point in building up this cash and do nothing. I don't know if I totally agree with that. They're preparing for they're going to need some cash. They got to rebuild or build up that inventory. They want to make sure we're still 1 full quarter, or not 1 full quarter, but we're still not quite at the console. Yeah, we're still not quite at the consoles yet. I'm okay with the cash position. I don't mind cash positions. I know I get where you're coming from, Ming, but I don't care about that downside protection. I would be more concerned, Ming, if they use the cash to do some stupid ass shit. Like some dumbass acquisition, you know what I mean? That's when I'd be like, what the hell are you doing? But sitting on it, chilling, just have you sitting back like, nah, let's just build up that balance sheet straight. Know what I mean? I don't mind that. Traders will mind that because they really betting on a short squeeze, the buybacks, blah, blah, blah. That gets like the short-term thinkers maybe upset. But not me. I don't care. I don't give a shit. I just want that. I'm so happy they have that cash in the books right now. I said that before. I was one of the people who thought they should have been doing those buybacks back in the like 9 months ago, and then I was happy when as the pandemic was unfolding. I'm like, I hope they didn't do as many as I hoped, and they had all that cash in their bank, like $500 million in cash. I'm like, that's sick. Even right now, I'm still happy they have that cash in the books. I think it's again, at the short-term thinking, you might be disappointed, but long-term, I don't care, because I still think as long as management's doing a good job of everything else, that they'll use that cash effectively. Or I hope they might not. They could still screw it up. You know what I mean? They're not beyond reproach or anything like that, but it's right. Yeah, so far everything I've seen, it's good. All right, Ryan King, same-day delivery would be sick. I agree. That is the only way brick and mortar beats Amazon. You have to be faster than they are. That is why Best Buy is still around. I agree. Yeah, brick and mortar can also be. Look at Chewy. Excuse me. Well, I mean, they're e-commerce, just crushing on e-commerce. But I was gonna be like, you can have some in-store experience as long as they complement one another, right? That's right. You need to be, you need to have. My point being, for a store like GameStop, you need to at least compete on that same-day delivery type stuff, right? You need to compete on the e-commerce front. But in the case of GameStop, you should also have some in-store experience or type stuff to attract people to that business. But indeed, you need to. The same-day delivery is gonna be sick if they pull that off with a sick app and everything like that. That's what I mean. When I pull up these things, they're very clearly focusing on. Oh, did I X out of that? Oh, maybe I X'd out. They're very clearly focusing on those first 2 pillars. Did I still have it open? Oh, I still got it open. And so can you imagine? Order the game. I heard someone say too. I don't know if this is true. They're like, you get the same day delivery, right? On the app, you could probably Or you could go pick up the game at the store before the game downloads, or you could get it via GameStop before the game downloads. That's probably true for those huge, gigantic games. You're still going to have people download, right? But I thought that was kind of funny. I'm like, yeah, people probably would. That's why brick and mortar is still relevant. Like you said, that's why Best Buy is still around too. You can get all that stuff elsewhere. Why do people still shop at Best Buy? It's the same case for GameStop. Ming, but you can preload games though. Oh, sorry, Ming. I don't know what you're talking about there. Harsh Patel, I personally just want Cohen to take over and direct the company towards the right path. Cohen will most likely build up this position first before he gets more involved. I don't know. Yeah, maybe. It's still not clear to me what's necessarily the best path, but I like the optionality of Cohen getting involved. Also, it's a little bit of a vote of confidence. You see his success with Chewy, and you see his success here. All these different articles, they got to $3 billion there in just like 6 years or something. Someone like that, and you see all these articles where he's like, he's trying to figure out what his next bet is. He's like, really, everyone's really building it up, and then he pulls the trigger on GameStop. If nothing else, that's a vote of confidence. You know what I mean? Same thing with getting Burry involved. So I'm not so sure. I wouldn't say it's definitely in GameStop's best interest to have him take it private or anything like that, but it's an option. Hugo says, I hope that too. What I've seen is that Paul Evans has been in contact with Ryan Cohen business. Cohen made Chewy beat Amazon in revenues with more than 40%, so I hope he makes something there. So I agree, yeah. His involvement's good because he had such success with Chewy, he might be able to make it work with GameStop too. So even if he, like some people have been talking about what's going to be his involvement, I have no idea, right? We don't know. We didn't get any more intel today. But it seems like he could have an advisory role. Maybe he gets a seat on the board. In theory, he could take it private. He'd probably have a PE backing. We have no reason to think that right now, but it's technically possible, right? You always got to keep an open mind about what's possible. You certainly wouldn't want them to be taken private at too much of a discounted price, but you got to consider it. Like if they were bought out at $10 a share, that would be a disappointment I assume, for many shareholders. But the funds like the larger like Vanguards and so forth, they still have a good chunk of the shares. So, but from the point of view from regular old shareholders, there's still tremendous upside here. But maybe Cohen's making a move. You know what I mean? I don't know. So who knows what's the best move right now? I don't know. But I like the optionality. Harsh said e-commerce sales includes pick up from the store or web order from the store. On top of that, they don't have inventory in the store since it's reduced significantly, so people are basically forced to buy online. So I was actually looking forward to even higher e-commerce growth. Oh, right, even higher than 800%. Yeah, because wasn't it much higher back? Wasn't it much higher in was it like 1,500%? Or there was an article about that. But right, and now it's 20% of sales, right? Hopefully that number keeps growing. It's a good move in the right direction. Yeah, I wish this figure were higher. I wish it was. I wish e-commerce sales were 50%, right? And then you also hopefully they get to that point. But it's a step in the right direction. We always want more. We always want more perpetually. But yeah, I don't know. Let's hope with the nice app of the same day delivery that gets this flowing too. I don't really have any numbers in my mind, but I'd like the more e-commerce sales, the better, right? To complement the brick and mortar store, I would really love for those to be. That's the thing. That's why that's a big reason why this console refresh is so important, right? The free cash flows, right? But like shit like this, like let test out some stuff, like the same store delivery, like a prime equivalent for GameStop, in-store experiences, whatever the hell they look like. Just pick out a couple of the Tulsa ones. Just test this shit out because you got to test it out now, and then they could figure out what people really like. Maybe they really just like that prime equivalent type model, or yeah, you know what I mean? Like, I don't know, and neither did they, but it's important. Get ready for November, and I think that's what they're focused on right now. So that's why, yeah, there's room here for the e-commerce sales to improve even more. Daryl Vitor, hey, cheers, Daryl, welcome. Bear thesis for past year. GME shorts believe the risk that Microsoft and Sony would do away with the optical disc drives. No, so Daryl, that was kaput in 2019. We've known that. But I mean, your point's valid though, right? Your point's valid is that at least back in the day, bears have been against us. They're not gonna have optical drives. No one's gonna buy disc. But like we've even known that they're gonna have disc optical drives. People still don't give a shit. That's why I included in that video, especially the one of Microsoft saying like, millions of people still want discs, and that's Microsoft saying it. You know what I mean? I always laugh at that one because it's like people say no one buys discs, no one wants discs. I'm like, yeah, they do. But right, so Daryl, like that's their bear thesis. Oh, and then Daryl said full DLC inevitability and slow loss to digital sales eventually undergoes GME's used game segment. Question then, isn't that exactly what's playing out. Oh, but this is the thing, Daryl. So looking out, it depends what your time frame is. If you're looking out like 10 years, perhaps. But in the meantime, there could be a ton of free cash flow that could be generated in addition to what's currently on their balance sheet, almost 800 million in cash. Is that they reinvent themselves, right? That's a critical part of the bull thesis. But yes, so that's what people are betting, Daryl, is that people, number one, probably maybe they don't think GameStop's going to generate that much in free cash flow this cycle, which I don't think that's a particularly strong argument personally, because physical is still quite relevant. And GameStop sells other stuff besides those physical discs. Is going to get people in the door. They can sell bundles. I know that that's not necessarily the high margin type stuff, but there's plenty of opportunity that suggests they're going to generate enough free cash flow that the downsides. This is why the bear thesis. So I talk about the bear thesis really concerning me, right? So there's the shortage just because it speaks to their conviction, but the downside protection. This is what I mean. Like, I think I said this on one of my streams. Like the downside protection. Like you not only need. Where did I say that? Oh yeah, I said this on one of my videos. You're betting on like the obsolescence, that the business model is no longer relevant, but also management incompetence. Like you need to bet that they're going to generate this free cash flow, and then they're going to lose it. They're going to waste it. But in theory, they could pay out a damn dividend. I'm not saying that they're going to do that or that they should do that. Blah blah blah. But if you got 500 million in cash on the books, let's say that's all. Let's say your balance sheet, that's all it has is 500 million in the book, just for simplicity's sake. Like, how do you short the company if it's already at 500 million in free cash flow? Like, what the hell are you betting on? What are you betting on? So, not you, Daryl, right? I appreciate you mentioning these points because this gets us talking about that bear side. But so that's the thing is that that's the point is that that the DLC stuff, we're moving in that direction, and that it's slowly GameStop's gonna lose share, and that's fair. But there's this opportunity for GameStop to reinvent itself, and that's the bear thesis. So in addition to what you're saying, Daryl, they're thinking that GameStop, maybe they do generate some free cash flow. They won't generate that much, but even what they do generate, they're going to waste on what's going to turn out to be fruitless endeavors to reinvent themselves. That's the bear thesis. But I think I like I was talking about optionality. I like optionality, and GameStop has that in spades. But this is the thing, Daryl. Like how can you be 100%? Not you. But are you 100% sure that they can't reinvent themselves? And this sure that even in the meantime, let's say you're right. Not you, Daryl. I keep on saying you. I'm talking to the shorts. Let's say the shorts are right that GameStop is like a 0 in 5 years or 10 years. You know what I mean? Like in the meantime, what if the stock price goes 4x or 5x because a little bit of a squeeze, right? There's the risk that GameStop doesn't reinvent itself. No shit. Talk about the risk that there's a little bit of a squeeze here that gets the price flowing. This is what I mean. I think that a good chunk of the short interest is in weak hands. And that if you get this stock price, if this stock price just get to like 9, 10, 12, I bet this is speculation, pure speculation, that all of a sudden this bear thesis is going to die down a bit. Like, yeah, maybe they could reinvent themselves, but they do get the free cash flow, so I'm going to close my short position, in that the short position is going to collapse from like 100, 110%, whatever the hell it is, down to like 40% or 30%, like a much more reasonable figure. Watch. Well, this is my bet, is that it's the price. There's nothing that drives the narrative like price. It's hilarious. I mean, I'm not saying it's necessarily going to happen in this case, but I've seen it happen with so many stocks. Oh, it's going to zero. This thing's dead. And then the price turns, and then all of a sudden the bears go quiet, and the stock price goes boom, 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 and then they go, all right, okay, so there's something here. It feels like it changes overnight. That's why it kind of feels like it's a little bit happening with GameStop. I feel like we're kind of experiencing it real time. And I suspect that this bear thesis that Daryl's talking about here, that it's still relevant. I don't mean it's irrelevant or that it's wrong, but like it's going to be downplayed. Like, yeah, but in the meantime, GameStop's going to have quite a bit of free cash flow. Also, look at the strength of that balance sheet. Maybe they could make something work here. Maybe they'll be like a Best Buy. Like the discussion will just change. I think it's hilarious. I mean, not as GameStop long so much, but maybe from a psychology perspective. You know what I mean? Anyway, thanks for tossing that in there, Daryl. Trey Daniel, did you hear the announcement of the new mobile app? Yes. So sorry, I'm just catching up. The new mobile app sounds sick. I know Ryan said that too. I can't wait to see. I don't know when. I think they said it's going to be done within the month or something like that. I forget what they said, but I'm excited for that. I just want to test it out, see how it goes. Like I said, sometimes you use an app, you're like, oh, this shit is sick. This is dope. And hopefully, if you enjoy using it, the gamers enjoy using it. We'll see. It's not like a game changing thing or anything like that. It's an app. You know what I mean? It's just an app, but. Even still, this is what I'm talking about. I know I'm just clicking around here, but like they're prepping. They understand the importance of reinventing. So blah blah blah. Oh, check this. Does this work? Oh yeah, look at that, sick. All right. I always try to do that. Like, what's a stream because it's ridiculous. Like they want to be ready to run. So like that app's gonna be dope. All right, Harsh says shorts are stupid. Harsh ain't mincing words. Harsh has had enough. Shorts are stupid. Harsh is gonna rip management to shreds and all this other stuff. Harsh like, nah, shorts are stupid. To have their money invested in here with so much GME having so much cash, they could invest their money somewhere else and make more money. Why keep staying short in GameStop? That's what I'm saying, Harsh. What the hell? I don't understand. Yeah, I agree with you. It's insane. It's insane. And maybe there's a problem. Maybe if it does go down tomorrow, I'm not even convinced it's going to go down tomorrow. It could go green tomorrow. Like it's one of those type of plays where if it doesn't go down 20%, it goes up, and like the shorts start freaking out. They go, oh shit, it didn't go down as much as I hope. Remember, they're going to see the chart too. And then if it hits the previous. I know this is technical analysis. I don't know how many technical analysts we have in here, but I'm a value investor. Hopefully you're a deep value investor at that. You can see it in my other videos, but like I pay attention to this stuff, and I always think it's funny when it works out according to what the books would suggest. But if you're short, right, and it doesn't sell off 20% tomorrow, like you kind of need it to, don't you? And if it doesn't, and it starts running, so this is what I mean. And then if it doesn't, and then you could see the price get bid up tomorrow. I'm not saying that's going to happen. That's not a prediction. But watch it. There's only 2 million. What did we say? How many shares after hours? It was only 1.6 million. That ain't shit. I'm sorry, but that's nothing. You always hear me say how this after hour shit is noise. It's just for shits and giggles. So when it's down, you grab the beer and have a laugh. And when it's up, you grab a beer and have a laugh. What else are you going to do with that? Let's see what happens tomorrow. And always more importantly, what happens by the end of this week. And of course, by the end of this month. You know what I mean? September's, no matter what happens tomorrow, let's see what happens by the end of this month. This monthly stuff is important. Like what happens over the long term. You know what I mean? Anyway, to your point, Harsh. Yeah, they're insane. I don't understand. Maybe they're gonna be right, and I'm gonna look like a fool. I'm fully prepared for that. I'm not saying I'm definitely right. The longs are definitely right. I'm just saying I think I have. Maybe Harsh. It sounds like you agree with this. If you're calling them stupid, I think I feel I am more confident that this is a bad trade. That going short GameStop with the current level of short trades is a bad trade. Than going long I already said that this stream, but the going long is a good trade. You know what I mean? Like it's just so damn risky. Hey, what's up? What is this? Joseph Ryan? What's up? Cheers, Joe. Cheers, mate. 1440 at 120 FPS is pretty good, but you would expect 4K. No, I know. No shit, Joe, right? Yeah, that's what I'm saying. Like, here it is, 2020. How you going to roll out a console that isn't 4K, right? Like, kind of surprised by that because does it take up that much more space? Like, I mean, this is above my pay grade too, but I was kind of surprised by that. But it's pretty good, Joe. But you'd expect 4K, right? So it's like, yeah, it's good, but I wonder how much that resonates with people too. If people really want the 4K, I don't know. But it's just one more thing when you compare the consoles that I was kind of surprised that they were going to have that much. But even still, there's still going to be plenty of people who buy that, right? That's cool. They might even buy it from GameStop. I hear GameStop's going to sell it. They're going to sell it there. So that'll get foot traffic going too. But anyway, thanks for sharing, Joe. Appreciate it, mate. Trey, it scales to 4K. Oh, so 4K, yeah, it does scale to 4K. I did see that. It's just not native, kind of like the Xbox One. Trey Daniel says, yeah, Pui says 4K a must. I agree. Yeah, I thought 4K was a must too. Cheers, Pui. But it's okay. It's not. This is all marginal analysis, right? Kind of just having a conversation about it. Trey Daniel, Xbox Series X at $49 is a steal. I know some people were saying it was going to be $600. My friends were saying they were happy. Like $500 is a good chunk of change, but it could have been $600, right? Maybe it was going to be justified. And I wonder too what the games are going to retail for too. They're going to be like $70, $80 even. I don't know. But even still, that kind of feeds the pre-owned narrative where people might prefer the physical disc because of that. You know what I mean? If you diving deeper into your pockets and stuff, you might want some resale value. All right. So Joseph Ryan, there's a big push on Game Pass with EA being included. So I saw that, and Pui said EA is a cash roll. Wish they improved their games without the microtransactions. So yes, Joe, I did see the push with Game Pass. I think that's a good thing, right? A little bit of a, I know they didn't talk about it on the conference call, but a little bit of a teaming up with Microsoft there, and that they're going to offer this type of stuff. These bundles again gets people in the store. This is the type of thing where GameStop can remain relevant, offering these types of things just partially. So that's good that GameStop's going to offer. It looks like there's only a handful of retailers. I mean, the big ones, Best Buy, Walmart, and I think, I saw the Microsoft store. I thought those Microsoft stores were closed, but they said they're going to be offering it too. But even still, it's good that they're going to be offering that stuff. Anywhere GameStop talking to people to offer stuff is good. We said EA's a cash whore. Wish they improved their games without the microtransactions. So I always got turned off by those microtransactions. I'm happy to, not happy to hear, but it's interesting to hear other people feel the same way. It's like, come on, I bought the game. Let me just have the damn game. You know what I mean? But they're always trying to improve their own profitability. So you can understand why they do it, but we're still pissed off about it, right? Son of a... Trey Daniel, I'm hoping for the revamped mobile app to allow pre-ordering. It would be a great experience as a customer. Yeah, I know. So they announced the pre-order too for at least for Xbox, right? We don't have the Sony stuff, but that's coming up. And I wonder if they'll be able, will they have it in time for the pre-ordering? Maybe. Yeah, that'd be nice. That'd be a great experience. Plus if they can do, Trey also said, plus if they can do the Xbox All Access, you can get the console and Game Pass for $25 a month for 24 months. Yeah, so that's a nice offer, you know what I mean? Eduardo Fierro, cheers, mate. Management call sucked. Oh, welcome, Eduardo. They had no plan in sight. Makes phone want to sell. Well, I mean, if you've been watching, I'm sorry, I'm catching up to these. How far? I'm almost caught up. Sick. I didn't think it sucked, but it could have been better. I'm always gonna feel that way. And there could have been more of the plan disclosed, but I've already talked about this quite a bit. But yeah. So thanks for sharing, Eduardo. I am curious to hear how other people perceive the call. All right, Harsh Patel, you keep talking about cash on the balance sheet, but that's at the expense of inventory at the store. True. Yep. The question is, how will lower inventory impact their future revenue? Sure. So yeah, this is what I mean. So when who was it? Ming was saying all that cash on the balance sheet, they're going to need that cash, or a good chunk of that cash. First of all, they also have debt on the books too, right? But they're going to need that cash to build up their inventory and for other stuff in preparation for the rolling out the new consoles. So how much of that inventory was there to buy in Q2? You know what I mean? There wasn't much. They're preparing. And so, yeah, I'm not suggesting, Harsh, neither, nor, I don't know, you're not assuming this, but it's not like they could pay out that as a dividend or something. They need that cash right now. As far as buybacks go, I'm not sure they need all 780 million of it. Like, can you spare 120 million to do the buybacks? Sorry, quick buyback segue there. But your point's valid, though. Yeah, they have low inventory right now. That's why they don't have to lean on this cash to build up this inventory again. They have to. And the shortage of the some of the inventory this quarter too isn't all their fault, right? But even still, your point's taken is that it's not totally unencumbered cash. Hopefully I didn't say that. I mean, I think of it as it's unencumbered because like accounting wise, gap wise, but it's encumbered in that it's earmarked for another use. But I expect, Harsh, obviously they're going to build up the inventory as these upcoming quarters, right? As these upcoming quarters unfold. Remember, it's only this balance sheet is as of the end of the end of July, beginning of August. We're in a good spot. You wanted them. Wait, how much are we at? What is it? 813. Holy shit! What's the balance sheet at? Sorry, I just wanted to check. What is the inventory level? So 474. So what's interesting is that a lot of people have been shitting on the inventory, like saying, "Oh, this is low quality inventory and all that shit," right? Like, first of all, I don't know if I totally agree. This is carried at cost, right? This is a carried at the lower of cost or market price, right? And if anyone's traded your games in a GameStop, you know that cost to them it tends to be quite low, and they mark it up. This is the business model. This is how the business model can even exist. So it's at the lowest of cost, those discount prices they pay, or the market price. So it's already at a low price. And remember, in theory, maybe they can't resell it at fat margins, but a slight margin, right? But also, it's possible, you see this big drawdown in the inventory over these past couple of years? It's very clear that management is focused on this improving working capital. Like, you like to think, and I don't know this, I was a little bit unsure because of their improving gross margins, but like it's possible they got rid of some of their suckier, for lack of a better word, their suckier inventory, right? It's possible they got that out the door, and that this is, I don't want to say high quality inventory, right? But I mentioned this on one of the streams, but if you go into the footnotes of the 10K and you try to back out the quality of this this inventory, it kind of looks like it's higher quality stuff where it's like consoles or somewhat newer games. You kind of got to do it like you got to invert it a bit. I haven't done it in a while. Hopefully I did it in one of my videos, but check out the 10K and try to pencil. Anyway, my point just being like this sorry, Harsh, I'm going off on a little bit of a tangent. It's lower inventory, and this is, I don't think it's a concern, but it's something we need to be aware of. They need to build up their inventory moving forward. But it could be that this is closer to fair value than people appreciate, because everyone's always shitting on their inventory, like, 474, it's probably closer to 300. And I'm like, I don't know. They've been doing a good job of, maybe they got it fairly valued. They've already taken some hits on the write-downs and stuff like that, so I'm not so sure. Anyway, I know I do that in one of the videos. We pencil through the quality of the balance sheet. And what's book value, by the way? What is it right now? 350. So it's 352. So here, hey, heads up, a little bit of accounting here. 352 stockholders' equity. There's no intangibles left. what's that, 540 and pretty high quality. These are high quality assets. You know what I mean? You talk about inventory. They got almost 800 in cash. Shit. Anyway, sorry, where was I going with that? The book value. Oh shit, I forget where I was going with that. I forget. Doesn't matter. Okay, so let me keep going here. Talk about cash on the balance sheet, but the expensive inventory. The question is how will lower people. Sorry, Harsh Patel. People buy at GameStop, so get something on the same day. If the inventory is low and people can't buy something on the same day, they would rather order online at Amazon. Yeah, so they have to build up. They need to have more supply. That's absolutely. I don't think anyone would disagree with you that on Harsh. You can critique the past quarter. A lot of you knew this though too. I know they were mentioning on the subreddit and a lot of chatter about it. If you looked online, you could see they were out of supply on some stuff too. But I don't think it's that much of a concern moving forward. But maybe the quarter wasn't as bad as some people think because of this type of stuff. But anyway, I think that's low-hanging fruit to critique them for that because I think I'm more concerned with issues that aren't solvable. You know what I mean? If you can't solve this shit, then I get concerned. But like that's not a permanent issue. I don't think. Pui said same-day delivery would be amazing. Love the T-shirt. Hey, cheers, Pui. Thanks. Here we go. I got this. Actually, I got a hat that looks like this too. Thanks, man. I appreciate it. I'm just having some fun with the damn Roaring Kitty channel, right? I got a whole bunch of this shit. I got too many. Let me tell you something. I got too many. I got some. If you saw on the other videos too, I got some of these plush kitties too. But now they're effectively my daughter's toys. She just plays with them now. Oh shit. Okay. Trey Daniel. GameStop needs to experiment, but just not in an extreme way. Add value to the consumer. Rework power-up rewards as something of an Amazon-like experience for gamers and position themselves better. I agree, Trey. I think that's what they're doing. You know what I mean? People want these big news items, and then everyone's surprised and shocked. But like this thing's incremental. It like takes time to unfold. They test out these little, just like I always say on the stream, we're testing stuff. It's rare that I'm going to make some big, bold claim. I mean, I make some bold claims, right? GameStop's a bold claim. But it's rare that you're going to make some big, bold claim that this is going to work out or that's going to work out. You got to iterate over time. Let's test technical analysis. Test this trade, test that trade. And just, if it's not working out, reassess, right? But GameStop has to do the same shit. It's even more important for a GameStop, right? Us, you just pull the trigger, you trim a position, sell a position, you're out, add a position, blah, blah, blah. No big deal. But in GameStop, they kind of got to get this right. So I agree with you. They just need to experiment. Nothing extreme. Add value to the consumer. That's well said, Trey. I'm just going to repeat what he said. GameStop needs to experiment, but just not in an extreme way. Add value to the consumer. Rework power-up rewards as something of an Amazon-like experience for gamers and position themselves better. Well said, mate. I agree. They just take care of these small things, and that's why I do think that's what they're focused on right here. Take care of the small things. And then set yourself up for success 6 months, 12 months, 18 months down the line. I think that's what they're doing right now. That's why Trey, some people are disappointed with this conference call, even myself to a degree, right? That you're always hoping for more, but they're a very focused management on like, we got to take care of this shit before November comes. We got to be in a good place. And then we're going to focus on this next thing, which is good. But sometimes you just like add a little flair in this, right? Get Ryan Cohen on this damn. Maybe. I don't know. Like I said, I don't know what's necessarily best, but I'm just like trying to think outside the box. You know what I mean? I don't know. Let's just test shit. Anyway, well said, Trey. Eduardo said, I hope you don't look like a fool. Oh, shit. Well, no shit, Eduardo. I hope I don't look like a fool either. Do you know about other cases where the short float was as high? Eduardo, no, I don't. But if you have any. So what's funny about GameStop is that in its short interest is usually, and maybe this is the case for many value investors here. I know I'm blocking this shit. But, I can just move this. Is that when I see a short interest this high, I'm usually like, nah, that ain't for me. That's too high. Usually the shorts are not totally cuckoo, right? I'm not saying they're necessarily cuckoo. I'm just saying the trade itself is insane. But it's usually a deterrent for me, as it is for many value investors, because it's like, it's a really tough. Usually the sentiment is so heavy, it can be difficult to get out from under it. But that said, it also means there could be tremendous opportunity. So I've chalked GameStop for years. In the short interest, remember when Barry wrote us out, it was like 50 or 60%. And I'm like, yeah, I was long at GameStop by the time his letter came out. But I remember thinking 50, 60%. And then it got up to 100%. I'm like, what the hell's going on here? And so I've never seen it this high. But I have to say, I don't traditionally follow this super close. If anyone has any examples of like 100 plus of the float. And remember, it's even more as a percent of like an adjusted float figure where you might take out like Hesta and Permit or even Barry. Maybe. I'm not saying like, or Cohen. And then as a percentage of the float, you're getting in like You're getting in some crazy, crazy numbers. Like, I haven't seen shit that high, Eduardo. If you have, let me know, because I want to read about a case study. Everyone's read about the VW squeeze, right? Oh, you know what's... Oh, you know what? You know what I want to pull up right here? Here, I just want to pull this out there super quick. Let me pull this out there super because I was reading the. First of all, I've been kind of poo-pooing the short squeeze because it doesn't seem super likely to me, but everything's set up where I'm like I don't know how this unwinds systematically. So I was like reviewing this stuff again. Let me accept to continue. Is this the right one? Well, I want to have this one open, but no, I wanted to check something in particular. Where was? Oh, this one. Watch this wording. Watch this wording, and tell me what this reminds you of. This is so funny. Oh shit, am I blocking it? Okay. Yeah, infinity squeeze. I've never really heard infinity squeeze. I don't know if this is their own terminology here, but what is this website? Mox Reports. It's their own. This is from December 2018. But check this wording. The VW infinity squeeze seemed entirely counterintuitive at the time, and that is exactly the point. All infinity squeezes are the result of heavy overshorting of shares, which then become difficult or impossible to cover. Such aggressive overshorting only occurs when the bear thesis against the fundamentals is conclusively strong and very well disseminated. In other words, stocks which appear to be the best short ideas are often also the ones which often end up being most likely to see the most violent short squeeze. So I read this, I'm like, yo, I don't know if there's a more telegraphed short thesis than the GameStop one, right? So I was having a laugh about this. I still don't think the squeeze is necessarily likely. In my experience, which isn't that much experience focusing on like short squeezes type stuff, but it's usually with companies way, way, way more leveraged. Like in the case of like a VW, go check out these articles, by the way. They're good articles for just some market history. And again, I don't know how relevant it is, but in this case, there was only 12% short interest at the time. It's a really good story. Check it out. But it was only 12% short interest, and it went. Where's that chart? It went up like 5x. It went from like 200 to 1,000. Oh, I included that in one of the videos. I included it in the thumbnail. Where's that chart? I forget where it is. Oh, there it is. Yeah, it went from like 200 to 1,000. And it was only 12% short, but it was because of these large positions when you adjust for the float. And then everyone was caught off guard. And so anyway, what I was getting at here too is that Volkswagen was super leveraged. It looked like it was going to go bankrupt and blah, blah, blah. And so you tend to see it more for that one. But I had to laugh at this, right? Is there a short thesis out there that's more well understood by everybody, that everyone knows it? You go, oh, GameStop. They go, all my family and friends like, oh, you're like, oh yeah, physical disc, dead. That everyone knows this. They know this a priori. They know it automatically without doing any research. Everyone, you know this, and this piqued my interest last year, and I'm like, really? So I'm definitely wrong about this. Okay, and so then I go, and I'm not definitely right about this. Eduardo, you might be right, man. I might look like a fool. You know what I mean? Shit, I don't know. But importantly, I have the downside protection for the time being, and I have the upside optionality. That's what I'm focused on. That asymmetric upside we talk about, right? And so that's the case. Even in the case you don't even need 100% short interest for something crazy to happen like this. Again, I'm not forecasting this to happen, but indeed, I've never seen it this high. I can't explain it except it's just an absurd level of conviction. Forget the GameStop thesis. It's just an absurd level of conviction to have in any damn stock play. I've never seen. Have you ever seen someone so confident in a position? I mean, I have too, and I'm an idiot. Like when you're younger, when you're first getting involved with stuff, you're like, oh, this is definitely going to work out, and then it doesn't work out. You're like, all right, yeah, I'm an idiot. I mean, that still happens to me, right? Yeah, this is going to work out. Oh, shit, it did it. Okay, yeah, I suck. So the market reminds you of that all the time. But like this level of conviction, I don't know, you're not so scared. You'd be scared. How do you sleep at night? But, I mean, it's not like they're totally unprotected. It could be hedged, right? You could have... you could even have shares, calls. You could have even just a stop loss type thing to get out of it. It's not like this is what I mean. It's conceivable that you could have this level of short interest and still unwind the position. And I say that in one of my tweets, like I have no idea. I have no idea if this can be unwound systematically. A lot of people on the stream say no, it can't. I don't know. Maybe it can. I'm not so sure. But Ming, Roaring Kitty, but why do they need a full cash amount? They also have increased revolving facility. Oh, indeed, yeah, Ming. Oh, I'm not saying they need the full cash amount. Oh, what else did you say? So they can buy back stocks and draw on the revolving facility for the inventory. I agree with you. Oh, I totally agree, Ming. I think there is plenty of liquidity to execute to exhaust the buyback authorization. I think there's plenty of liquidity. I'm with you. I didn't mean that they need all the cash to build up their inventory. I just meant it's not like they have 800 million cash just that they can do willy-nilly with. They have debt that they need to take into consideration. Some of their remember they paid off some of their revolver. If anyone was paying attention. To those figures, it's only down to 35, right? Is that it? Yeah, they're only down 30 because they pay off some of that. So like they need some of this cash to pay off this stuff down the line, blah blah blah. But and for inventory and all this stuff. That's all I mean. But indeed, there is plenty of liquidity here. So you have the cash, but also like you said, the revolver to exhaust the authorization. So I'm kind of at a loss for like let's say the stock price stays in the $6-7 range for this quarter, and they don't exhaust it. Then like I don't even know what to say. I keep on saying that they must have a good reason. Like it's so obvious that that's a good thing to do with 1/8 of your liquidity of 1/8 of your liquidity. Like it's so immediately accretive. And I said this on one of the stream. One thing to remember though, there's multiple stakeholders involved here. There's bondholders, there's shareholders, there's customers, there's employees. There's a lot of stakeholders involved, and it's a balancing act. It's not everything for the shareholders. That said, this is why. Like I said, I was happy they didn't execute it last year. I was glad they had the cash. But right now they have so much cash. I'm like, I think you can still satisfy all these stakeholders and still exhaust the authorization. But maybe I don't know enough about it. I always think like maybe the management knows something that I don't know, that we don't know. But I'm really not sure. I'm like, what the hell's going on here? But again, there wasn't that much volume in July, so once that bond exchange was behind them, there wasn't that much volume. But so that's what I mean. So if they don't do it this quarter, and it's still been at a discount price this whole time, what the hell, man? Like, what are you doing? Then I demand that an analyst ask that question, like, what the hell are you doing? What's going on here? All right, Jordan, what's up, Jordan? Management need to sell the quality. They need to sell the quality of GameStop. They need to improve this. Quarter was fine, but they have a hard time selling their brand. On second beer, amazing IPA. Cheers, cheers, Jordan. See, Jordan knows. Jordan's been invested in GameStop a while. He knows. He's on a second already. I probably should have grabbed a second, although this is a pint, so I'll be okay. Yeah, this is a new one, right? You see, they talk about all this cat shit, right? I had to get this one today, huh? Look at this. I've never seen that one before, but I had to. That's a riot, dude. If there's any other cat IPAs out there, let me know. But I agree with you, Jordan. I know I've already touched on this during the stream. Like, they need to sell themselves a little bit. Add a little flair to this shit, right? This is exciting. Like, I wish they would have did a little bit more of that. But I agree with you, Jordan. It was a good quarter, not a terrible quarter. It certainly doesn't substantiate the short thesis at this level. At the same time, it wasn't gangbusters. It's not like they're definitely saved or anything like that. But it was a good quarter. And the way you know this is because of this damn balance sheet. That's it. Yeah, I know. They have a hard time selling their brand. I don't know. I don't know. I hope there's a plan. Harsh Patel, 353 million compared to 611 million. Was that cash? Sorry, Harsh. I forget. I'm all over the place. They will probably lose another 200 million in Q3, so it will go down to like 153 million. Do you mean cash? What do you mean? Oh, you mean book value. Sorry, I'm trying to catch up to you. Maybe. Yeah, that's the thing. Oh yeah. So I remember what I was gonna say. Sorry, Harsh. I'll catch up to this. But if you notice on the income statement, they netted a small gain. They closed out the sale of the jet. They closed out the sale leasebacks for some of their distributions or warehouses. I forget, and they netted a small gain. Where is it? 10 million gain on sale of assets. 11 million. So they this is small. This is nominal, just like GAAP accounting type stuff. But they just closed another sale leaseback in August. So there'll likely be another small gain. It's so small that it's even silly to mention it. But there'll likely be another small gain. Maybe it's 5 million. Maybe it's 10 million. But this is important, right? They didn't sell those assets on the books at a loss. They sold it at a small gain. So I'm talking about the quality of the balance sheet and what all these assets are actually worth. At least the whatever they were carried at. Was in the ballpark of fair value, and so when you get another small gain in the context of book value. Sorry, I went off. That just reminded me of Harsh's comment. But indeed, and so I said this in one of my videos too. Like, expect them on an earnings front to there could be some losses here. Book value could take a hit. We just saw it take a hit right here. We're down to 353. What's that? 353. Oh, geez, down from 611. That's what Harsh was saying. But it's about cash flow. I'm less concerned about some of this stuff. And I guess I was hoping too. Maybe they get a little bit of a beat. Maybe imagine if they remember if they had positive earnings this quarter. Shit, that would have been something. It will come. This is important. Like they're reining in their costs right now in the at the tail end of the console cycle. This is going to result in potentially major profits on the upswing. You know what I mean? And this is the thing. You see this in like commodity industries as well, like energy and stuff. They cut those costs so much in the down, or even let's see with gold mine. Like let's see the gold miners right now. They got crushed, and they're always trying to manage their costs like to survive. And then once on the upswing, they just generate a shit ton of profits. You know what I mean? And so GameStop's going to be in a similar situation where right now it looks really bad. It's the headline numbers that catch everyone's attention. I did a quick search, after the call, and like right away I already saw some like negative articles out there. Like people want. It's almost like people want it to go down, and then the articles just pile on. Like it's interesting that everyone's immediate take is that this was a bad quarter. Like within the hour, this is what I'm saying. Like it's their knee-jerk reaction. Again, I'm not convinced. We'll see what the market does tomorrow. But this wasn't that bad of a quarter, like Jordan was saying, and but it's interesting. Yeah. So I don't know. But anyway, wait, the sentiment will turn, and I still think that it could be happening right now. Let's see what happens. But once that sentiment turns, those articles will stop being a bit more optimistic. But we're not there yet, and that's what I was seeing with those articles shortly after the call. All right, they really have to turn around. Harsh said they really have to turn around in Q4. Q1 is for some reason they cannot when then it's over for GameStop. But I mean, there's like no way people won't spend money on new consoles, games during holidays. I agree with Harsh. They don't have to have it turned around by Q4, Q1, but we certainly need a more a comprehensive plan shared with us within the next 6 to 9 months, right? I mean, if we don't have it by then, it's like, what the heck? They got to be testing stuff as the new consoles are rolled out. That's why it's so important, this console refresh, not just for the free cash flows, for these experiments, to figure out what the consumers want. Remember, they love that app, the same-day delivery, Prime Plus, Power Up Rewards Plus, blah, 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 all that stuff. Jason Lynch. Hey, what's up, Jason Lynch? Cheers, mate. Okay. Sorry, I missed that. How concerning is that the gaming industry got a big bump from COVID, but GME didn't capture much of it? Will the new consoles really fix that problem? All right, good question. So, I wouldn't say that GameStop didn't capture much of it, because what I think is that, so this is the thing, this is why it can be tough to try to analyze these things, because I think, look at this, comp sales declined 12.7% with all their store closed. It's weird to say this. This is them capturing a benefit of the upswing that they may not have had otherwise. And so it maybe they didn't capture as much as people were hoping. But remember, when you're like it's just the nature of being at the tail end of a console cycle when their e-commerce stuff isn't totally revamped yet, and still some people aren't even going to stores. 12.7% ain't that bad for this late in the console cycle. And if you see in the other videos, I talk up about how much this year is supposed to be so damn bad. And again, I get a little bit of benefit because of this. So indeed, maybe it's not as big of a bump as some people were hoping, especially if you have a short-term mindset. You might be disappointed with this. As a longer-term investor, I'm not. And I think, oh, this is nice that it was only down 13. Look, check out the year-over-year comps. Like in January last Q4 was worse than this. And this is the summer before the new consoles. Like, this is supposed to be terrible. And they pulled all the games and stuff. I know. Like games got delayed, like the developers and stuff. It's all over the place. I thought this was gonna be way worse of a year. So I don't have much to say besides that, except this is gonna be lumpy. This is gonna be rough. In that for the thesis to unfold, the bull thesis to unfold as people hope, they just need to to get to that console refresh and get those cash flows, and they're on their way. They're on their way there right now. Will the new console really fix that problem? It won't fix the problem. They need to fix their own problem. The new consoles get them that increased free cash. They get them the free cash flows. They give them the opportunity. I know I'm repeating myself, but just to answer Jay's question here is that it gives them the opportunity to fix the problem, right? And this is what the bears just toss out the window. Not possible. Nope, it's done. It's done. It's over. I'll stick a fork in them, put a nail in the coffin. It's done. And it's like, no. There's an opportunity here. That's ridiculous. Don't be so confident in that. And that's the thing. There's an opportunity to fix it. There's no guarantee they will, but they have an opportunity, Jay, that's not being priced in and should be priced in. And even at the current price point, I mean, some people are saying this is an elevated price point of $735. That ain't shit. Like, this downside is so protected that like 10 to 15 seems more. Remember, they bought back shares. You look at these damn charts. You look at these charts looking out 10 years and stuff. Like, this was before share buybacks. They have 1/3. There's only 65 million shares. Back in the day, it was like 130, 40, I don't even remember. And so people have kind of given up on this opportunity, but it seems conceivable to me. It's unfortunate that people, they kind of just write it off so quickly. I think it's just too bad. Ming, Roaring Kitty is a beast. Hey, cheers, Ming and Jay. Appreciate it, guys. Thank you. He's getting GameStop worried bulls bulled up again. yeah. Well, the only bulls are worried if you get that short-term mindset, short-term thing. I can understand, because you want it to be up every day. Remember, I was saying it could even trade up into earnings, and it was flat. It was like scary flat. Friday, Tuesday, and today, and I was like, whoa, this is super flat. But if you got that short-term mindset, yeah, this is why it's so difficult to bet on these things. Like these, I was leaning bullish. Well, again, let's see what it does tomorrow. I was leaning bullish into this call. You can only lean one way or the other. Good luck for these analysts have to forecast, like precise forecast. I don't do that. Can you imagine trying to forecast these percent? I just can't do it. I can't bring myself to do it. So what I'll do is I'll just lean one way or another, and I lean bullish, and then I see this. I see the report, and it's not. I was hoping for more things as I'm talking about, and then I see the sell-off, but I'm not convinced this is a legitimate sell-off. We'll see tomorrow and what it does throughout the rest of the week. But the bull thesis, fully, in my opinion, is fully intact. And if you disagree with that, or if you think, like if you're a bear on the stream, hopefully there's some of you, and you think, no, this latest earnings release has ripped the bull thesis to shreds. You need to show your work. I need to hear why, because I don't see it in this press release. Maybe it's delayed a little bit. There's no imminent short squeeze, but well, it's really the short squeeze folks who are betting on that Cohen getting involved. They're going to be disappointed in this. But I think those are marginal investors. I don't think they represent the lion's share of GameStop's longs. But that said, the stock price at any given time is dictated by that marginal trade. Whoever is that, like, this is why after hours is so silly. You see these trades. You scroll down, like you'll see like 100 shares trade, and it's not like 650. Like, who cares? This person. No, if this is you. If this is you making this trade, no offense, but you don't dictate what that like the price is, right? That's kind of dictated the volume weighted average over time too. Even one day, like tomorrow's initial reaction may not be that meaningful, but what it does in September is kind of like this is what the average price is. But so the people who are super like disappointed in this are like the people who are betting on they need that quick turn up. And so in that light, there's a case to be made. Maybe there was too much enthusiasm, but honestly, I thought it was so focused on like just a couple of folks, like the people who tuned into the stream. Like I wasn't seeing it broadly. I wasn't seeing that broad enthusiasm. So I thought maybe it's not known enough. But even still, that press release wasn't bullish enough. I don't think it was bearish enough to break the bull thesis. So if you think that, you got to let me know. But I also don't think it wasn't quite bullish enough to keep everyone invigorated and all that, right? Okay, Trey said they need to make GameStop the place to shop this holiday season by augmenting the experience, bringing back pre-releases, even with COVID and everything is a great way to get involved. I agree, Trey. You're speaking all the right things today. SoftBank is probably shorting GME because they have a huge stake in Amazon. Maybe I know you see all that SoftBank stuff. That's crazy stuff. And then Jordan said, new rule, every time you say cheers or welcome a new guest, you need to actually take a sip of your drink. Have I not been doing that, Jordan? Yo, that's my bad. I've tried to. Too many fake outs and drink goes down. Come on. All right, that's fair, Jordan. I think I agree with Jordan's rule. When we get a new person joining in here, cheers to you, and I got to drink, okay? I think that's fair. I might need to start bringing down. I need to get a fridge in here, right? Just keep them available with GameStop too. Maybe after every new no, I don't want to get extreme here. Every dollar increase, right? That's a beer. Oh shit. Okay. Oh shit. We got through all the questions. Hey, thanks so much for the questions. Right. Look at this. It's 8:40. These questions are really appreciated because it gets the conversation going. Some of the best learnings for everyone here, I mean myself included, happened during this back and forth. Because I mean, hopefully I can answer some of your questions, but you get me thinking too. It puts me on my heels. Like, all right, I better have a good answer for this, or if I don't, it's okay. But we got to go investigate. In the case of GameStop, I know so much about it that often I'm so dialed in. I have an answer. It might not be the right answer, but at least in my mind, I have a take. For other stocks, I'm not always going to have the take, right? I mean, we know there's a ton of other stocks in the Roaring Kitty portfolio. But so anyway, I appreciate it because it gets the discussion going, and I think it's good to talk about this stuff. This was helpful too for your initial takes. I was kind of curious what people's takes were heading into this, and so that's helpful. So let's pull this up. Let's kind of put 840. Okay, let's pull this apart. And I already mentioned those top things that caught my attention. The cash flow. I'm huge in the cash flow because of that downside protection, and yeah. All right. So let's see. The 800% e-commerce, someone had said they were hoping for more. Yeah, you always want more, but still it's a step in the right direction. They're up to 20%. That's good. SG&A, they're continuing to whack that, but they still need to get it even more. It looks inflated right now. Oh yeah, do I have this up? Oh, did it not work? I got it in what? Do I already have it up? I got my GameStop fundamentals here somewhere. Oh, there it is. Circ. So I'll show this. Just want to show off. So this isn't going to be updated for this quarter. Damn. I mean, it's not going to be updated until later. But I was going to show the gross margin increase just quickly. If I scroll over, you can see the year-over-year. Can you see this okay? This year-over-year gross margin increase. See, it went from 27.9% to 29% this trailing 12 months right up top there. Just show this. Look at that. It's actually coming in handy. That's gross margin that I'm highlighting right there, 27. So anyway, I'm just showing off here. It was up year-over-year. This is trailing 12-month data that you see. And this was in as revenues are collapsing, down 25%. You know what I mean? So look at this too. The year-over-year revenue declines. It went. This is this is trailing 12 months through May. It's not updated yet. I'm just want to bring up. Look at this huge decline in revenues, and gross margin was up. And then you look at how it did in this quarter, and you only see the 13% decline. That's meaningful. That's like an uptick. You know what I mean? So that was kind of what I just wanted to showcase there. But I'm sure I'll be going back to those fundamentals there. All right. So the second quarter saw strong progress towards strategic. So a lot of this thing, many of you might already know this. Like, there's a lot of fluff in here. There's really not. There's like I'm trying to home in on a couple things in particular. So I'm just gonna move through quickly, just as I normally would. 800% SG&A. Oh, sorry, SG&A. That's what I wanted to pull up just quickly. So I have SG&A over here. Oh, sorry. For those new, this side of my spreadsheet, I'm sorry I have to scroll. That's something I should clean up. A lot of these are like 3-year rolling averages. When I'm looking at the fundamentals, I'm just trying to catch the trend of stuff, like what's happening over time fundamentally. So I'm usually just looking at 3-year average type stuff because I just want to smooth that stuff out. Oh yeah, look at the share count. So sorry. Sometimes I'll pull stuff up and something will catch my attention. 2012 was 134 shares. And now it's down to 65. It's been halved. That's why some people talk about, you see these videos, like it could go to $50 per share. Like, I'm not saying that's going to happen, but $50 per share was $25 per share back in the day. And that ain't shit. So the SG&A, here's where I have each individual year. And where's SG&A? Right here. So you see the uptick, right? 25% to 32%. But part of this is because revenues were declining. So this is the thing. They're reining in costs right now. So when you get the uptick in revenues next year, there's going to SG&A margin is going to be smaller. It's going to be a smaller percentage of revenue. So this is what I mean. They're reining in costs right now. They're taking care of shit right now, taking care of business, so that when they get this hopefully increased free cash flow, the new consoles and so forth, it's going to be like a ton of free cash flow. That's the plan. That's what they're doing. But it's hard for people to look out like 6 months. It sounds crazy, right? Like, this is why you have a huge edge. If you're just willing to look out, it's crazy to think. But if you're just willing to look at like 6 to 12 months, I know people say like 3 years or something, and that's often my time horizon, like 2 months, 3 years. 2 to 3 years. But even just 6 months, right now, no one, and there's so many other opportunities right now. People are just like, oh, I'll deal with GameStop later. Although now it's September, so I don't know what people are waiting for. But if you just look out 6 months down the line, there's going to be a potential for huge earnings as a multiple. Speaking of the multiple relative to the current share price, like, it could be absurd. Like, they could. I'm not even like it's not crazy to think that they could generate like $2 or $3. Is that crazy? They do like $2 or $3 per share next year, right? That's not like, that's not absurd. I feel like it's not even that absurd of a bull. And I'm talking about free cash flows too. I say earnings, but just as a proxy, as a proxy for free cash flows, like they legit might be trading at 2 times. It's even conceivable 1 time. So can I just show that? I say this in one of my videos, but just quickly, if I just pull up simple free cash right here. So if anyone wants to know, like, I got a whole bunch of metrics in here and stuff. If I could just show you the definition, simple free cash flow is just, can you see this okay? It's just operating cash flow less CapEx. So it's what everyone, like, it's just a simple estimate, right? So if I go over this and you look at the early years of the last free cash flow, past performance is not indicative of future performance, right? But if you just look at how it did, these are trailing 12 months too. So these numbers aren't going to mirror what you see in the 10Ks. But from 2013 to 2015, they generated a total of $1.5 billion in free cash flows, or an average of $500 million. Roughly $500 million divided by 65 just is $7 per share in free cash flow. Now, I'm not saying they're going to generate that, right? But that's insane. The current share price is $7. You know what I mean? If they can just generate a fraction of that free cash flow that they did back in the day, this is trading at a discount. It's as simple as that. That's why it's so difficult to take the other side of this, because you're telling me they can't even, with all this cost, and I think that they had a bloated cost structure back in the day. So I think they're like taking care of business right now that they legit could get back to 200, 300, 400. Like, I don't want to get too bullish on this. Like, I try to be conservative with my estimates. I mentioned in one of my videos, like, in my mind, it's highly unlikely it's worth less than 250s. And then you get that out of the way. Then it's like, all right, what could the upside be? Like, I don't think it's crazy to think they could generate $200 or $300 million in free cash flow. And if they did 300, that would be $4.50 in free cash flow. Like, that's insane with the share price. But maybe I'm too bullish. Maybe, like, I don't know. I just think because they're focused so much on cost, I think there could be more of a tailwind of or waterfall profits to be made than people realize. Okay, let's keep going. Okay, but so the SG&A, that's why I brought that. The balance sheet improvement 735, but it's really closer to 780 because of the sale leaseback that happened after the fact. Roughly, I know they did other things in those quarters, but okay. So a couple people said some things. Yeah, feel free to jump in as I'm going. Trey, I hope they just listen to the activist investors, especially Cohen, if he actually wants to provide input. Yeah, until we hear from him, it's hard to speculate on what the hell his intentions are. But if he has good ideas, then sure, I hope they listen to him. But I assume they have good ideas too. And Reggie, because he ran Nintendo extremely well. I wish we heard more from him. I haven't heard shit from Reggie since March or April. I kind of want more from him too. I know a lot of people like him and stuff, and it would be nice for him to, in time, right? You can't rush these things. These things take time. But I agree. He did a good job with Nintendo, and I'm sure he has great ideas. I say that in my videos too. Where you think going tomorrow by end of week though? Oh, Arsh, cheers, Arsh. And per Jordan's new rule, got a drink. I have no idea, Arsh. Oh, I wish I could tell you. Arsh is just curious. Where do I think it's headed tomorrow? I don't know. I think I don't know. First of all, I'm a longer term investor, or I'm looking out a year or two. I'm really bad with these like day to day guesses. Like I said, I might lean one way or another. Like I lean bullish coming into this earnings call. I still think it's conceivable it goes green tomorrow. Not a prediction right now. It's probably a safer bet to say it's gonna be negative. But I don't know. One thing I wouldn't say. I really don't know, Arsh. It could be down 10%. It could be down 15%. It could be flat. I lean toward it would be what I kind of. Let's keep an eye on the experiment. Let's see if it bounces back to this 650 range, right? Like tomorrow. And then if it stays there or bounces a little bit, I think that's going to be, can I say it's hilarious? I think that's kind of funny because that's what the charts are saying it could do. And I like I said, I'm not so sure that this news, I don't think this press release was so negative that it warrants collapsing through this. It could. I'm not saying it couldn't, but so I'm bad at this stuff, but I'd say, yeah, maybe it pulls back to here and hovers around, but it could even go green tomorrow. So, but Arsh, it's not even worth it for me to make a forecast because I don't know what the hell I'm talking about. Also, as this goes without saying, nothing I say on this stream are recommendations. Of course, it could be GameStop's not even a good stock for you. I always say that. This is just how I'm managing the Roaring Kitty portfolio. For anyone curious too, I might as well pull up that Roaring Kitty portfolio just quickly for the folks who are new to the stream. But we believe it or not, there are other stocks in the Roaring Kitty portfolio that besides GameStop. GameStop's the biggest position now. It's even bigger now because of the run up and because I did add a bit on the I added a position to it. But there are other stocks in the Roaring Kitty portfolio. But anyway, this stream is about managing this Roaring Kitty portfolio, and this is not recommendations or anything like that. Again, these stocks are a hyper-aggressive strategy that's not a good fit for most folks. Could be not a good fit for most folks on the stream. So view this, I classify this as educational, and I try to put all these disclaimers in. But just as a reminder, when I'm talking about this stuff, this is just fun forecast, have a beer, talk about the news on the day, talk about how I'm managing, and hopefully you can gain some insights. But even still, like today, we got good discussions, and this is helpful for me to talk about this shit. And also, I'll say, too, there is nuance in this portfolio. Like, you can't think... I say this all, I feel bad, the people who are in here all the time, just because a position's at the top of the Roaring Kitty portfolio doesn't mean it's like a conviction buy. They're up here for different reasons. This is why I need to make more videos like the GameStop video for these other positions too. I'm just focused on GameStop right now, but I got to do this other ones. That way you don't have to tune into the stream to hear what I have to say about it. I feel bad. But anyway, there's nuance here. So like a position might be in the top 5, but really it's not an ad. I just haven't trimmed it yet. You know what I mean? So just view this as educational. But actually, I bring this up because this could be helpful for you to see what types of stocks I might be dealing in this environment right now. And actually, I get the portfolio up here too. So if I pull this up, here's roughly the breakdown. I like to pull this up too to remind myself. So I need to up this cash. This cash is because I deployed that. I added onto the GameStop there. Which I probably, if it does pull back, I'm like, I should have done that pullback. I'm trying to get better about the timing of that. But you can see kind of the breakdown there. I feel like that's helpful to see. I'm bottom up, but I pulled this up to kind of see the top down stuff. Actually, let me scroll over so you can see the industry type stuff. There's the sector type stuff. There's the industry type stuff. So this cash position is way too low. Please don't. I need to get it. It's just because I just deployed it. It was just at 5%. I feel like it wasn't that long ago. So I need to get that up, rebalance some positions, got to get that up. That seems a bit low in this environment, but we'll see. But anyway, sorry, I'm going off a little bit of a tangent there. Okay, Colin Keen. Cheers, Colin. Oh, shit, hopefully don't get an onslaught of new people here. Then I definitely got to need another beer. Colin, trying to come up with a reasonable price target for November leading into the new console launch. I would like to think it could run up a bit like in 2008, 2013. Yeah, Colin, this is the issue with that, Colin, is that people are trying to use... 2008, 2013 as like a as an indication as to what it might do this time around. But that's tough. That's tough. It's a different environment. We're way closer to. I mean, there's way more digital downloads and all this stuff, and the thesis is different this time. But even still, I kind of agree with you, Colton. Where I expected a bit more of a run up. It still seems super cheap to me. And I'm surprised that there hasn't been a bit more run up right now. That's not to say it's not going to happen. It still could happen. But even right now, it's September right now. I expect a little bit. But it's hard to see what you'll get back then because this is a different environment that we're in right now. Again, this is 7 years. Is it 7 years? Yeah, 7 years difference. A lot's changed in this time. There's a lot more. There's competition. You got increased Amazon competition, the discs and so forth. So, but even still, this was part of my thesis is that would be a bit of a run up just because it's hard for me to envision this heavy of bearish sentiment persisting through a catalyst as robust as like a console refresh. It's a legitimate catalyst. But here we are. It's September, so what the hell do I know, right? What the hell do I know? Anyway, it's tough, Colin, to come up with these price targets. I don't really have a price target. As I'll often say, people will say, "Oh, what do you think?" I think up. That's my price target. Looking out, now it's September, but like by end of the year, I still lean toward up. I do more than lean toward. Like I'll lean for like short-term predictions, but right now I still think up. That's not a recommendation to buy Colton or anything like that, right? But the downside is protected, and there's so much upside optionality that I have to. This is what I do. I just make sure that the downside's there, and then that there is potential for upside, and then I wait for the sentiment to shift. I mean, it's as all value investors know, it's frustrating at times because you're like, is this going to turn? Is this going to turn? Is this going to turn? But inevitably, it does. It happens so often that. I don't throw in the towel easily because you got to be careful with that. And right now, everything keeps unfolding as I would hope it would be unfolding, but it's just taking longer than I expect. Like that it was sub 4 in August blew my mind. That's why I was adding. I'm like, this is crazy. And that short interest is still as high as it is. I'm really impressed. I'm really impressed with their conviction. But as far as the price, like it could be Colin, it could be. I mean, it's hard. Like I said, it would be hard for me to I think it's more likely that it would be over 10 than down to 5. You know what I mean? Or below 5 or below 4 again. Like if we're below 4 in like October and November, I don't know what to say. Like that would even take me by surprise. Like a sentiment, like that's what I'm seeing in the fundamentally. Like it's not indicating that. It would have to be really like if the whole market sells off. You know what I mean? There's other things to consider. And I mentioned too, there could be a bullish tailwind if people start piling into value stocks. And they could have nothing to do with GameStop. All of a sudden, people want, and I say value stocks, I mean like stocks that are trading below cash, like GameStop, or stocks that are trading at low price to book, or whatever it is, what people traditionally classify as value. Like then no news could come out on GameStop, not even like a Cohen type position, but it just goes up. It doubles like in 3 weeks or something, just because people want those types of stocks. And that's almost impossible to forecast. I try to keep an eye on it. We pull up some of the charts, those relative comparisons between the charts, like the S&P versus the Russell, whatever it is. And I try to look for it, but it's so tough to forecast that type of thing. Anyway, that's a possibility, but same thing on the downside. Everything could sell off. Then GameStop would come down to like 5 or 6, but geez, I don't know. So I would just say my guess right now, Colton, is up. That's my only guess. But then there's short squeeze potential. Even though I don't think it's likely, I factor it into my mental models here of like shit, $20-$30 on a short, on like a crazy short squeeze. But the problem is if everyone's thinking that's going to happen, it's kind of like less likely to happen. But you can never, I can't rule it out. Okay, William invests. Cheers, mate. Welcome. Buy FNKO. Yeah, Funko, right? I know Funko. Can I just pull up that chart just quickly? Oh. Hey, this chart don't look bad. If you know my stream, like I say, a chart like this, I'm like, this looks interesting. It actually does look interesting. Oh, see what I mean? So you can see, whoa, look at that sell-off. Shit. 27 to what? 3. Wow, it looks kind of similar to GameStop, don't it? Look at this. It's about a double right now. All right. I mean, I won't look at it now because I got to get through the GameStop stuff, but I'll take it. I've looked at it obviously back in the day because it's pertinent to GameStop. And when I looked at it last time, I remember thinking it didn't look that cheap, but shit, this looks like it could be. Plus the chart, I'm not ashamed to admit it. When I see an intriguing chart, I'm not above taking a position based on a chart alone. It would be a small position, but like this looks kind of interesting to me. And then if I want to add to it, I got to dig into the fundamentals. This is what I mean. So I talk about the difference between technical analysis and fundamental analysis. Like the thing with I'm increasingly using technical analysis, but I'm a deep value investor at heart. You see this, but like the issue with technical analysis, I think I mentioned the string. Where do you get the conviction? You can never have conviction to take a sizable position based on a chart. Like you could never take a 30% position in your portfolio or even 50%, something crazy. You could just never do it based on the chart. But I'll take a starter position based on a chart. And so charting is good for like screening, timing stuff, catching your interest, that type of a thing. But then you kind of need to dig in for adding, but then you need to know the fundamentals to really build a legitimate position. And that's the conviction I get from fundamental analysis. And so I mentioned in one of my videos, I'm surprised more people don't do it. Like, and there's people on both sides. Fundamental investors think technical analysis is cuckoo. They think it's like voodoo type stuff. And then technical analysts think fundamentals are crazy. I definitely said that in one of my videos because I have a laugh about it because I think, me personally, I think it's beneficial to use both. You know what I mean? Like some bolt-on skill sets, kind of put yourself in the shoes of what other people are thinking. This is why I think the backdrop for GameStop is kind of bullish. It looks good because I think technical analysts will like it, then the value investors like it, and then if you can get that sentiment shift, then people who just want like the momentum type stuff and the good story and stuff, they pile on. But anyway, all right, now I'm ranting and raving. But yeah, FNKO. Oh yeah, so I take notes here too. So let me, what's today? 9/9. All right, let me make a note of that. I'll look into FNKO. Check out FNKO per who? Per William Invests. And what would I say about it? Pertains to GameStop, and interesting chart. Sick. Cool. All right. If stock goes to $5, company will definitely need to buy back stocks. That's what Ming says, right? If they go back, then that would be that's what I think. So if you're a legitimate investor in GameStop and the stock pulls back to $5, you're not really too upset with that, right? Because you're like, sick. They can buy back because they still have the authorization. They can pull the trigger on those buybacks. That's sick. You only get upset if it's that short-term thinking, but if you're like an investor in the business, you like it. It's not a bad thing. But again, if you have that short-term mindset, it's tough. William Invest, load up and keep your work. Love convictions. Thanks, William. Cheers, man. I appreciate it. Colton Keen. Then again, when the Switch came out, it didn't really move GME at all. Switch. So one thing to bear in mind, you got to be careful with these individual fundamental events, though. Like you say, when the Switch came out, it didn't move GameStop. There's so many other variables that impact the stock price besides like a one-off fundamental event. In fact, I had a conversation with someone about this. Here, let me pull up GameStop again. It was a good conversation where... like there have been things released for GameStop. This what was it? Yeah, was it 2017 back in the day? But there's other stuff going on. Like when that Switch came out, like man, GameStop has had 6 different CEO tenures since then. They had a way larger market cap. Like there's an argument to be made it was overvalued, and then there was way more uncertainty around its business plan. They had bloated costs. So my point, Colton, is to just point out that there are other variables at play besides a one-off fundamental event. And so that stuff can weigh more heavily on the stock price than the boost from the Switch sales. And what I was saying was, imagine where GameStop would have been without the Switch. Then you think, all right, that stock price might have been in the gutter. It might have been toast earlier rather than later. You know what I mean? And in that light, it helped things out. Well, of course, it helped things out. But you need context for your analysis and your decisions. And the context back then was kind of shitty for GameStop relative to today. You know what I mean? I listed all those things. And today they got costs reined in. They got a new management team with a new vision, even if you don't agree with the vision. And we don't know exactly what the specifics are, but there's a vision here. We got a new board. The board has been refreshed. We got Reggie on. We got Cohen taking a stake. We got, excuse me, the beer's getting to me. We got 2 major consoles coming out, which is going to be, and then we got a new Switch upgrade. Like this backdrop is sick. Doesn't mean it's going to work out, but when you compare the 2 backdrops to these things, it's like it's way better now. So that's why you got to be careful, like pinning it on one fundamental event that might be happening, because there's just other stuff to consider. It's tough. Which this is the benefit of doing like analysis. If you like dig in, you're always trying to understand the story of the stock. And what happens is some people subscribe to an inaccurate story or an incomplete story. And I think my thesis is the shorts have subscribed to an incomplete story that they've dialed into some very important data, but it's incomplete. There's other things that are going on behind the scenes that need to be taken into account, especially if you're serious about shorting the company. And so it's important to get the story right, and you do that by doing fundamental analysis. The chart can alert you to certain things, but you do this fundamental analysis. If you know the Switch coming up or the new consoles, then you get to dig in. What's the management team doing? What are the insiders doing? Is anyone taking a position? Is there an actual game plan? Are they reining in costs? Blah, 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 blah. Same old stuff. But that's where this analysis can come in handy, because it sucks. But I mean, it's not doesn't suck, but it's like surprising that it feels as though more people don't. But to be honest, I don't know. I'm an individual investor, and who knows. Okay, so let's see here. Sorry, I gotta catch up. Oh, I'm way behind now. Okay. Buy a Funko while you have the entry before it breaks. This is still William Invest. Would love to interview. Hey, cheers, William. I have done over 45 hours of TA the last 2 months on this stock. Very bullish. GME messaged me on Twitter. So yeah, so I did my technical analysis is super bullish too. I made a tweet about this, right? What the hell? So I'm bullish on the fundamentals, right? But the technicals, that's what I did. I kept on saying, and like now you have technical support, because technical and analysts don't give a shit about the fundamentals. They don't care about your bear thesis. They don't care about your bull thesis. They just see the chart and they think, oh, this looks interesting, and then they start piling on, and then the story catches wind. Then the narrative kind of shifts. Like I said, the price is going up. People are talking about it. They view it in a new light, even though nothing has changed. And so, yeah, in my analysis suggests too, this is super bullish. I mentioned like a 1 year of consolidation in this box, a little bit of a bull flag. I think, hopefully I got that terminology right. Kind of broke out of this bull flag, a little bit of some triangle shit there. Like this is marginal analysis, right? Though the crux of the thesis is so fundamental, but this is security analysis, right? Like a lot of people shit on GameStop. They go, terrible business model. Like this is a business analysis, but I'm trying to analyze the security. And when you're analyzing security, this other shit, you need to consider this other shit. And so, yeah, it just needs to be factored in. That's all. And it's possible I weigh it too. Let's see what the stock price does over the next 2 months. But all I can say is that this is, William saying he agrees, this is undeniably bullish. And let's see if this helps accelerate things. It may not. This is always an experiment, always a test, but it can help inform future decisions. That's why we're keeping an eye on it. All right, Hugo, just waiting for people to give me a good price for buying more stocks. William Invest bullish on Roaring Kitty. Cheers, William. You're not wrong at all. Patience, or should I say patience, smart strategy, take no weekend. Trade Daniel, diamond hands holding on to the value. Yeah, so that's the thing. You can't let the stock price like influence you too much one way or the other. That's why if you're like focused on after hour type stuff or in the daily moves and stuff, it will drive. Everyone has their own unique style. My style is I can't do that because it drives me crazy. And it turns out that it tends to be a profitable strategy of just backing away from shit, right? Don't get too focused on these things. Focus on the value of the company. And that's why when I analyze these press releases, and I analyze these press releases and I try to say, all right, is the long-term thesis still intact? Has my estimate of value still roughly in line? If you have a terrible, terrible quarter, like then that starts to impact fair value or the likelihood that they can make it to the consoles. You know what I mean? But when it doesn't happen, I go, all right, the thesis is still intact. And then you care less about what's the stock price going to do tomorrow? I just care less. I know a lot of people do care. And I certainly prefer if it goes up, right? I'm no fool, but it just matters less. That's all. You discount all these news items. Okay. Hey, Willie's got a lot of comments. Up short, medium, and long-term, 24-hour reserves. Yep, long-term invest, extremely undervalued. Trade Daniel, Funko, and GameStop go hand in hand. Right, it's kind of the same. So a lot of when you're looking at stocks too, even in the Roaring Kitty portfolio, some of the stocks are the same trade. Like a lot of these trades are a very similar trade in that they will likely all benefit if like there's more of a focus. Like in my other videos, I talk about, I don't totally agree with the whole value versus growth argument, but nevertheless, like if value starts going up in a big way, the Roaring Kitty portfolio is going to do well just because those types of stocks, and they'll go up like a rising tide. It's going to raise all the value of these stocks just because it's a similar trade. You know what I mean? So I'm going off on a little bit tangent there. You're saying Funko and GameStop are the same trade. A lot of these stocks are the same trade. Like if you're in the energy industry, you may have 5 different energy companies, but at its base, it's like the same trade. There may be nuances to each, but anyway. Okay, probably beat earnings like GME done for. Oh yeah, I mean I gotta look at. I can't look into Funko today. I'll check it out. Usually I do. Sometimes I'll pull up a company, but I don't have time right now. It's 9. Oh shit. Okay. William wants to do a stream together. Cheers, mate. I'm hoping my January calls absolutely print for me. They could. Who knows? With January, plenty of time. We'll see. Oh, William, sorry. I mean, you get so many comments. I'm trying to get to everybody's. William worked at a GameStop in college. That was a long time ago. I'm glad I found a fellow contrarian. Yep, this is definitely a contrarian play, right? Mad Max. Cheers, Mad Max. Got to take another sip now. Fundamental with momentum. Nice mix. Stock charts. Yeah, well, hashtag stock charts. Do you use stock charts too? Yeah, that's what I use. And yeah, fundamental with momentum. I like it. That's I do like momentum. Mad Max just said fundamental with momentum is a nice mix. I agree. Is momentum and one way you measure that, right, is how what the recent performance, especially the recent relative performance. GameStop's been holding up well in what was last week's downturn, which I thought was super bullish. And I still think it's super bullish. I know the market popped a little bit today, but yeah. But then once thing gets going, not a recommendation, but it can be a good idea to to layer on a position as things start to move up. William mentions moving averages, a good place to start studying. Too many drinks to spell correctly. Arsh, where do you think the next low support is, though, bruh? Arsh is wondering where the next low support. I'd say I'd say support is right around this 6 to 650 range. That's what I'd say. That's what the chart's saying. That's let's test it. We're gonna experiment. We'll see if this. Let's test out. Let's keep an eye on it tomorrow and the rest of the. Oh, there's only 2 days left, and let's see if this holds. If it holds in this 6 to 650 range. I just use a range. I don't care. I can quickly annotate that. This is the weekly chart, by the way. The weeklies are more meaningful. But like right here, this is as thick as I can make my line. I just do a big ass line and be like, yeah, that's good enough, right? That's good. You get it. That's 6 to 650. I don't care to get into the precise. But then you get a little bit of this gap up. This seems to make sense to me. There'll be 650. Let's see though. Maybe it doesn't. But I don't think this press release was bad enough to warrant like going straight through. But I've been wrong before. I'm wrong all the time. All right, Mad Max. Nintendo validates their Switch comment. Ex-Playboy VP running digital. Sexy. Thanks, Colton Keene. Thanks for the insight. Cheers, Colton. Appreciate it. Sorry, Mad Max. I'm not sure. Nintendo validates their Switch. Okay, I'm going to try to get cut up. Ready? Here we go. Anthony Manning, I love your flow. We'll subscribe. Cheers, Anthony. Appreciate it. I appreciate the compliments, of course. I appreciate any feedback. I appreciate the questions because you can see the channel's new. I don't know what the hell I'm doing. You tune in the Steam. There's been some folks here for the past month. I don't know what I'm doing. I'm just testing shit out here. So the feedback's helpful, especially on like those videos too. I know I've only done the GameStop one, but like that was me testing out different stuff. People gave feedback, and I'm like, all right, let me try to improve this. But I'd like to do it for some of these other stocks too. So I'm glad you like that. And I was trying to get things down quicker and stuff. I got to do it I've been saying that for so long. GameStop's just the focus right now. But I appreciate the feedback. Mad Max closing the stores is a good thing. I agree. That's one of their ways they're managing costs. They did the same thing with Victoria's Secret. Yes. William Invest, just let me know your hand about how to be in those DMs. Anthony Manning, where else can you go to trade in your old consoles for credit towards new? I agree, Anthony. The GameStop's the go-to place. There's other potential places, but I included this in that video, that quick 4-minute video I put together of like GameStop's it's the go-to place for trading in this stuff. So I agree. William Invest, like the video, folks, we are better than just 8 for the Roaring Kitty. Trade Daniel, even though people mock trade in value, the fact that you can easily trade one product for the store for another, even if you're not getting a full swap one-to-one, it's nuts. I agree. There's value. There's a legitimate. That's the thing is I think a lot of folks think, oh, I don't use this. There's no value in the GameStop model for me, but there's plenty of people out there. Maybe it's not for you, but there's folks out there who do use it. It's a nice option for people to have. It gives them that value, and again, I feel as though if you don't need that, that's a good thing. You're in a good position. But some people much rather prefer that trade-in value. So there's a case to be made there. Not so much that it's gonna looking out 20 years in the future. We don't need to have that discussion, but just that it's still relevant today. Mad Max, wouldn't their refurbished biz go way up if you can swap a Gen 8 with a Gen 9, sell your PS4 and get a PS? Yeah, well, I assume you can do the swap. William Invest, what's your Twitty Kitty? Oh, it's the Roaring Kitty. Look up the Roaring Kitty. I'm on Twitter. I should include that. I think it should be on my YouTube channel. If it ain't on my YouTube channel, I got to figure that out. There should be a link there, but check out the Roaring Kitty. Which shows Mad Max shows 650 refurbished pitch for oh yeah, the refurbished pitch for phones. Former manager, I can confirm. I'll be messaging you tonight, brother. Cheers, William. Cheers. All right, I'm caught up. Okay, let's keep going. Oh shit, 9:10. We gotta go. Okay, so we saw the cash, saw the reduction in inventory. It's good because the working capital management, it's going to improve inventory turns, that they can improve their cash conversion cycle, be quicker with generating that cash. But indeed, they'll need to build up this inventory. But it's a good thing to. I remember when they had like 1.3, 1.5 billion in inventory. I'm like, geez, that's a lot of inventory to just have. But so I prefer this smaller inventory base. And we'll move from here. So that was good. I just like to see a continuation of, of the working capital management. That's been a huge part of what they've been working on these past 12 months, and it's indicative that they've been doing a good job. Okay, so you can note what they're harping. Like that's what I'm looking at. What are they touting on this conference call? These couple of things. So that's what they consider some of the more important items to get out. Okay, we believe the actions we are taking to optimize the core operations of our business by increasing efficiencies and creating a frictionless digital ecosystem. That's just the same stuff, right? Same old stuff. It's just the same boilerplate language. Here, I got to close out of some of this stuff just to keep things moving here. Okay. Same old stuff. While the ongoing pandemic has created a somewhat uncertain environment, right? This is true. This is legitimate. It's an uncertain environment that they're dealing with. Okay. And that's why I give them a little bit of leeway here, because it's like, how could you have ever have like fully prepared for this? It's really tough, not just for GameStop, for a lot of businesses. Okay, so we are very pleased to the consumer response at GameStop to the few recent video game products introductions, and we believe we are ready with expanded service and payment options to handle the expected surge in demand and participate in very significant way in the console standard stuff, right? Obviously, I hope that's true. Okay, so the second quarter results, 942. I remember we were just keeping an eye on what this figure was going to be, 942, and so 27% year over year. But again, they had some stores closed, and when you adjust for that, it was only 12.7, which is pretty incredible. I mean, for me, I think that's pretty incredible. 12.7%. Oh, we got some more comments. Let's see. Mad Max mentioned 5-time turns for inventory. That is their goal to sustain. I'd like to see, just reading quick, I'd like to see new investor press release with a more refined plan. Well, yep. Hopefully we get more of a fine plan in time. And plan to integrate the new ideas. Yep. If you look, and then Ryan King says, if you look at buying games from a pure monetary perspective, you are better off buying physical discs. You can't trade digital copies. Yep. That's a lot of the thesis. Mad Max leaps on GME. Mañana muchas gracias, Ricardo. Keep up the great work. Cheers, Mad Max. I appreciate it. Thanks for the commentary. And Ryan King was adding, all discs are at this point as a game key. All discs are at this point as a game key. You're still required to download the whole game, even with the disc. Right. Okay. So good points, Ryan King. Right. Okay. Oh, right. Because you need the key. That's right. Okay. Yeah. Important things to consider when you think about physical versus digital. Salute, mate. Salute. I've been watching Sopranos. Somehow I haven't seen Sopranos my whole life. So as you said, my Mad Max said salute. I think salute, because that's what they would say. Salute. I think I'm finishing up season 3 right now, but sick, huh? I can't believe I haven't seen it yet. I saw The Wire before I saw Sopranos. Okay, let's keep going. Okay, so net sales down 27%, which would have been more alarming if it weren't for this adjusted sales figure, I'd say. The impact of operating during the last few months of the 7-year-long current generation console cycle and in the subsequent limited availability of hardware accessories. Yeah, I mean yeah, like this is what I mean. Like it's so bad, and I know Barry mentioned this in his letter last year. It's like a perfect storm for GameStop. It looks worse than it actually is, but right now this really bad look is what has everyone's attention. Like they're all focused on this, but this is management trying to say it's not as bad as it looks, but it is what it is. 13% reduction in total store operating days due to the store closures. So that's meaningful. 13% reduction. Wow, in this operating days. A 10% reduction in the store base. So that's good. They should be closing stores. I was wondering if they keep some stores open just because of the new consoles. Maybe they are going to do some, but reducing stores, the de-densification of the stores, they can close some stores and people will still shop at another one nearby. This is another way that they're managing costs. That's how you should view this, cost management. They mentioned this. Partially offset by almost 40% of closed store sales recaptured through the transfer. Oh, there you go. So 40% were transferred to another store, leading to improved cash flow. Excellent. Sick. Comp store sales declined 30%. Yeah, we got that. And it rose 800%. Perfect. Okay, let's keep going. Optimize the core business by improving efficiency and effectiveness across the organization. Is that the same exact language? It's like the same exact language. Now you know exactly what they're talking about right here. This is from the GameStop presentation that they released back in, what was it, May? They were as part of the vie for the board seats for the activist investors. GameStop, the activist investors had their own presentation. GameStop came up with their own. This is where this is from. That I created variations of this in the video that I used. All right, let's keep moving. Okay, so the SG&A reduction, 200 total. So they've been doing a good job. They've been touting the fact that this is what they've been focusing on. And they do deserve some credit on this. And again, they're reporting it right now, but the real benefit, where we'll really see the benefit, is next year. It's like once they actually have like sizable relatively sizable revenues and legitimate free cash flow, this cost management is going to be readily apparent. It's going to be ostensible. Everyone's going to see it at that time. But right now, all they're doing is reporting, and everyone's like, who gives a shit? Who cares? You know what I mean? So those who want respect, give respect. Cheers, Mad Max. Thanks, man. Haha, cool. Hey, welcome, haha, cool. Okay, let's keep going. Transform physical store presence through the ongoing de-densification of store base, thereby reducing costs, blah, blah, blah. Yep. Improved on strong liquidity position, generating 192.8. Everyone's going to say, oh, part of that was from the inventory. But you'd think I care. This is the thing. I don't care. I want to see you generate the positive operating cash flow right now, because this is them pulling the levers. I keep on talking about pulling levers. It's hugely important to pull those levers right now. Find the ways to generate that operating cash flow, and because set yourself up for success. In 182 in free cash flow. That's just disgusting, by the way. It's disgusting. In the market cap, look at this. In one quarter, I critique those numbers all you want, blah, blah, blah. 476 million market cap. And that's what they're generating in free cash flow in this one quarter. I get it. I get the nuances of this. It's not lost to me. I don't give a shit. This is what I'm saying. It's so bearish. It trades so cheaply. This is big. That's a big. It's a big free cash flow, even adjusted free cash flow measure relative to the market cap. You know what I mean? As defined by cash flow. Yeah, they define it right there. Strengthen the balance sheet. Oh yeah, can I just pull up that cash flow statement again? I just want to see. Did we get? It's 6 months. Do we get okay? So proceeds from sale of fixed asset, property, plant, and equipment. There it is, 52. Oh, we'd probably see it in the press. I was just curious. This is what I mean. When you have a company, GameStop's not in dire straits, but if you're in a company that's like struggling a bit. I want to see some asset sales, right? This is why it was good news they were selling that jet 12 months ago. Whenever they announced it, like they're making moves. They're not throwing in. They're not giving up on everything. They're. I mentioned this on the stream. Sometimes all you need for a thesis to work out is a management who cares. Like they're trying. That's not to say that they would succeed, but when I see a management who cares and it's a really ugly, hairy situation, I think, all right. As long as you're making an attempt and you're giving a whack at it, like you're doing a bond exchange. We covered some companies during the stream where I'm like, it looked really messy, but they were going for it. Management's like, let's do this shit. And they were doing the bond exchange at really discount prices. I'm like, all right, let's see. I'll give you it's worth investing some capital in that. So in the case of GameStop, I remember thinking they have so many levers they can pull. And so you want to see, like, let's raise some cash, sell some shit, sell some non-core stuff. And they're doing it. It's another way that I'm assessing how they're doing as a management team. They're pulling it off. Okay. Strengthened balance sheet. We saw the strength of balance sheet. Reduced borrowing. They sold out. They paid off some of their revolver. Got it down to $35 million. Sick. That's always just a revolver, right? Pay it off, use it, so it's fine. They just increased their access to the revolver this past week. 50% reduction in inventory and a 30% reduction in accounts payable. Yep. This is that working capital management. They're doing a good job. Like a lot of people overlooked that, myself included. It's not the first thing I'm looking at, but I'm kind of happy they're touting this stuff. I was happy they were touting this stuff back in the day because most investors don't. Who cares? That's not sexy. They want sexy stuff. Even on this call, even I was hoping for some sexy stuff, you know. But it's like they're doing the right things, but it's not being reflected on the market price. So it was an opportunity to add. Okay, completed the exchange offer. So they did the bond exchange. Now we got it reflected in the balance sheet, right? Completed the sale leasebacks. This is sick. Like another 80 million. Sick. So yeah, what's that total? So it's actually more than that, right? Another 87 million. Yeah. So that was that's sick. Sorry, now I got my beer too. Anthony Manning, you seen The Wire? Hell yeah, Wire's sick. Wire's sick. I'm trying to figure out which one I like more, right? They're both good in different ways, The Wire and Sopranos. Okay, so but they had those asset sales. Where I was going with that, 90 million in the liquidity. Okay, so there's talk about that. I mean, they could finance the authorization, or excuse me, exhaust the buyback authorization with just that right there. And so finalize the wind down of the operations. Yeah, we knew that was coming. 800% increase, improved fulfillment capabilities to recapture approximately 73% of sales through stores open for limited curbside. That's pretty impressive. So 73%, huh? That seems kind of high. You know what? They did the limited curbside pickup, and they were still kept at 70%. I didn't think that I wish I had come up with a number at the time. I didn't, but I would have thought like 50% or so. I know gaming was thriving, but because of competition and stuff, 73% sounds high, but that could be my rose-colored glasses. I didn't really have a prediction, so whatever. Despite being closed to customer traffic, yeah, that's crazy. Improved fulfillment capabilities drove a 90% fulfillment rate within 24 hours of placing. Wow, 90% sick. So they were doing a good job of performing well in this new environment. They had no experience with this in the past, so they did a good job. Okay, gross margin. So this was what caught my eye. I'm like, oh shit, gross margin decline. But we already know that automatically this probably had something to do with the mix of their products, right? Because margins tend to skew a little bit lower margin, and in the used games are higher margin, and so that I'm like, okay, so that's something to consider. Still, it was kind of a big drop, so it caught my attention. but driven by the increased mix of hardware sales, which carries a low. Oh, they say it right there. Shit, there you go. That's why. And someone sent it. Jordan asked too. Why they keep on asking this question on the conference call, right? I mean, like, it's like that's the reason. That's it. I don't know if they thought something more was going on there. I don't know. But it's that you don't focus too much on the quarter to quarter type stuff. Like that's why I brought up those fundamentals earlier. That it was up in those 12 months prior. It's just like that's this quarter. So it goes. SG&A, okay, down 130, down. SG&A was down 27% compared to last year. Of course, that's going to happen too because revenues are down, right? You certainly would hope, but this is the thing. So revenues were down how much? What do we say? Just aggregate numbers was down 26.7%. SG&A was down. No, I don't want to. What's regular? Just 27.7%. So kind of those should be they should be falling in tandem, right? That's how that shit should work. Roughly, and then they adjusted. They said it was only a reduction of 108 million, 24.3%. All right. Operating loss 85. Yeah, so a lot of people focus on this loss. So I will say it would have been nice if they had a beat on the earnings side of things. You know, it would have been nice. But I don't focus too much on the. I barely even looked at these. I don't even know what they. I knew it was a loss, and I thought, damn. Oh, and I see this lot. Like that's not a good headline number because people see that they think because a lot of people watching the stock, that's what they're focused on. You know what I mean? They're like PE and looking at PE ratio and all that stuff. I don't care about that stuff. I care about the free cash flow. That's That's why management's trumping it, right? But still, all else equal, you don't want a loss. I didn't like that, but it is what it is. I care more about the free cash flow, right? That's what everyone should care about. But too bad they weren't able to be profitable this quarter. But excuse me, just the nature of the situation. And again, this thesis, the GameStop thesis isn't based on Q2 2020, nor is it based on Q3 2020, right? I just thought it's based on thereafter, right? Q4 2020 and on. But so many people are focused on these 2 quarters. I think this is how everyone knew this is how it was going to work. It was always going to be a struggle. But I thought by now the market would have priced in where they'll be in 3 months, in 6 months, in 12 months from now. But the market still doesn't give a shit right now. I think part of that is the uncertainty of this environment that we're in. I said that before, how it made sense to me that GameStop wasn't taken off back in May, June, I guess even July, because everyone kept on thinking, I have no idea what's going to happen with the market looking out 3-6 months. GameStop is still 6 months out from the consoles, and everyone knows that's the catalyst, so I have plenty of time to get involved. But now it's September. What is it, mid-September? Shit, so... it's September 9th. Remember, too, this is spurious, but 12 months ago is when they started doing the buybacks last year. They went boom, boom, like they reported earnings, and we looked at this on the stream, and then a couple days later, look at that pretty line right there, huh? Look at that art. But, where was it? I just want to look. So it was up here. So same thing. This damn stock sells off every damn quarter. This damn stock, even I was like, a gambler's fallacy, right? It can't sell off again, get it? Even I was like, it can't do it again, can it? And again, we'll see what it does tomorrow. But even I'm like, damn, it did. You need to crush it. Just like on the bear thesis, it needs to be really bad. But on the bull thesis, the sentiment is so heavy, you need to crush it for the bull thesis for it to be a pop on that day. But anyway, what I was going to say is, so it got bid up right into earnings last time. But don't get too. You always need context for this. What people will pull up the GameStop chart, they're like, GameStop, and then it was right around the time Barry wrote his letter. GameStop went boom, boom, boom. But all of value stocks were up at this time. If you pull up any classic value stock, because I was obviously the Roaring Kitty portfolio, I was tracking all these stocks. Everything kind of bottomed out that second, third week in August. GameStop was a little bit quicker to bounce, and they all went boom, 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 boom for the next 3 weeks. So you can't attribute too much to a business when a broader move can explain it. You know what I mean? That it was just value stocks. Value stocks in particular crushed it for like a 3-week period. And that was part of this, it was fanning the GameStop move. And then it sold off that next day, right? Notice how it sold, who cares? Can you see this? This is so thin. Can I enlarge this? Oh, I can do that. The only reason I did it is because I wanted to see everything in one view. Oh, you can still kind of see that. Maybe I should just enlarge that for now. Okay. Anyway, look. So it sold off that next day. And then, but then it got bid up that next day. And then like a week later, it was higher than it was before. It's just something to bear in mind. You don't panic. You're a long-term investor. Who gives a shit about one day move through? It doesn't matter. And so obviously sometimes it's a fake out. You go, oh shit, GameStop's done. Watch all these. I can't wait to after I'm done with this stream. I'm gonna check out all the bearish commentary. I've been looking forward to it. I keep on saying like, where are the bears? Like when GameStop stock price started to rise, like no one was talking about it. I'm like, come on, I still want to hear the bearish thesis because I want to see what's so bearish about Ryan Cohen taking a stake? And there's nothing. I didn't think. And so now I can't wait to see this. But like, let's see how it unfolds over the next week or two. It could be up. Anyway, my point was going to be like, they started buying like a couple days out. As soon as that blackout period ended, it almost looks like it might have been right around here, like a week later. And then they started buying back the shares. Boom, 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 boom. And they went all the way into October. And that at least partially explains this move last year. Anyway, that has nothing to do with GameStop, where it's at right now. But anyway, I just saw the date and I think, oh yeah, because if you pull up the 10Q, you can actually see their purchases from each month. We did that on the stream a little while ago. And maybe it's part of the plan to get it too. I have no idea. Who the hell knows? Who cares? Okay, but I thought that was kind of funny. Okay, adjusted EBITDA. Yeah, and then adjusted EBITDA was -2. I'm like, damn, would have been nice to have some positive adjusted EBITDA, but they'll get there. What is this? Net loss of 171. Yeah. Compared to a net loss, right? The net loss last year over year, this was a good year over year performance, right? This year they had a loss of 111. Last year they had a loss of 415. Some of that had to be write downs, right? I assume. Surely it had to be. Okay, keep going. 926. Shit. Okay. Net loss, continuing operations. Yeah. Okay. So honestly, I just care less about this stuff, right? This stuff, I care less. I don't know what to tell you. I know the market cares. And that's why if you're a trader of stuff, like trying to short-term trade and day trade, like trying to make a move on GameStop this week, you probably care about this stuff. And that's at least partially explain where are we at right now. Oh, so that's where we ended. Down 10%. Okay. And what was the WAP? Sorry. Let's see where we ended. 686. 686 on 735. What's that move? 7%? Graphing calculator, baby. Let's do it. What do I got? TI 83 plus. Y'all remember those? Jeez, these things are tanks. I had the same one for a long time. How many times I spilled coffee? I don't even know. Those things last. I mean, they cost $1 million to buy these calculators, right? Hey, I think I got it from high school. I'm like, I'm keeping that shit. Okay. All right. So anyway, back to. Okay. So if you care about the short-term stuff, you probably care about this, but I don't care. I kind of glossed right over it. I wanted to make sure the free cash flow was still there and that the balance sheet looks strong, and it is. And then everything else is narrative. Everything else is like, how are you going to renew? How are you going to reinvent yourself and all that? And that's where I was kind of hoping for a little bit more on that front. I know I already said that, but that stuff matters way, way more to me than this income statement stuff. I don't care. It's not that I don't care. It just matters so much less. I weight it so much less heavily. Okay, capital allocation. So I definitely went here. I'm like, all right, I need bond or share repurchases. As of August 1st, the company had 7. Yep, so that looked good. Plus the revolving credit facility. As of so then they get the debt, right? So we know they got the debt. They got enough cash to cover the debt, the credit facility. They got everything. So that's what I mean. The bankruptcy is off the table, right? I never took that seriously. And then they got the exchange all done, which is sick. Yeah, and it's possible too that they weren't able to buy back. I don't know. I don't know enough about it. Hopefully we'll get some more word on that front soon. I don't know. Okay, the newly issued notes provide additional financial flexibility by replacing the extended. Yep. So that we'll see. So, and remember, I expect they're going to generate a shit ton of free cash flow from November and December on. That the free cash flow that they generate from then on should more than, I suspect that it will cover all the liabilities on their balance sheet, right? That in the current cash on the books could be unencumbered. You know what I mean? The inventory. I know. But I feel like people are discounted how much free cash flow they're going to generate from December on. Okay, so everything. But up till this point, I'm like, all right. So mostly the same stuff. Nothing really stood out, but like good stuff. This thesis is still intact. This is at this point. So then I'm like, all right. Any outlook? I didn't think they'd give an outlook just because of the uncertainty. I don't blame them. I wouldn't either. Again, put yourself in their shoes. I know investors want it, but what the hell? How are you gonna forecast anything in this? Sony didn't even announce their shit yet. Haha, cool. You think long term is still good? Haha, cool. Yes, I think you joined late, but yes, the long term thesis still appears as though it's intact. Not a recommendation, of course. Haha, cool, right? You know. Okay, due to the uncertainty around COVID. Yeah, so no update. So that was it. For the press release. I'm like, all right. So I tried to guess, and I was thinking like flat. I thought maybe it'd be flat, but that was probably dumb to think that it might be flat just because just because of how heavy that short interest. People are literally betting that it's not going to work out. And so with short interest that heavy, you also need to blow it out of the water, like I said. But I also said you need that for the short squeeze. But you even need it just to get out from a down day. You need really, really good news. And this is good news. And the thesis is still intact. But this is good long-term thesis news. This is good long-term thesis news. This is what I mean. It's still intact. But short-term, like what's GameStop going to do this month? Stock price? Yeah, there's not enough in here to think that it's going to go that it's going to short squeeze or anything like that. And so this, at least in my mind, I'm like, all right, so it makes sense for the pullback. And then on the chart front, it makes sense that it would go to like that 660 front, just technically, which if you're short, I think you got to panic a little bit. I think, I don't know what's going through their minds. But so then I'm like, all right, now we got to listen to the conference call. There's no transcript out yet. Seeking Alpha does a good job with this. If you don't know, if I can do this, I think I might even have transcripts here. Do I? No, I just got to go to Seeking Alpha first. So you go to Seeking Alpha, then you go to transcripts right here. Pull up type in the ticker, boom, transcripts, and then it'll be right here. If they do a good job, is that locked? Oh, it's locked. I guess you need an account to go back, but they can look at it. You got June's right there. So Seeking Alpha has been better about this past couple years. I'd say it's gotten better. So it'll probably be here tomorrow, and I'm gonna review it. So it's not here right now, but I assume. Hey, Pose77, what's up, man? Welcome back. Cheers, dude. And so this will be here tomorrow. I'll reread this this transcript. I recommend you do too, especially if you got a position in GameStop. It's helpful to check these things out. I don't check them out for all companies, but for the ones I'm really dialed into, if you're really dialed into and this is a serious position that you're serious about, you got to read everything. You know what I mean? But it just depends on it depends on the position. It depends on what you're trying to accomplish with the position. If it's a big one, you got to read everything. So I'll review this transcript and maybe we'll do it together. Maybe I'll pick out some things that stand out to me that are worth reviewing. I know some people mentioned some things on the stream here as to like the Q&A for the analysts and stuff. So we'll get to that. But anyway, my quick take on the conference call was I was hoping for a little bit more. But it was kind of just more like the same old, focused on like it was kind of similar stuff to what you see in this press release. Like you got the same feel about the quarter, and they did say a couple things that stood out to me. Is that they but I kind of forget off the top of my head. Like the 1 day, like the 1 day delivery, sick. The app was sick. Nothing crazy transformative, but good news in preparation. Like they should be all done come November. They got to have this tied up. And so I was happy they were talking about that stuff. And then there was a couple other things too. Damn, I wish there was. Maybe there's already a transcript up. Steve Mazzini, I've been trying to see if GME is in one of those brick and mortar indexes people are shorting, but didn't look like it was. Maybe it's a tiny position in some indexes. Is it? Is there a short? Yeah, maybe. Is there a short? Is there an ETF that just shorts retailers like this? And GME's, are they shorting GME? Oh, maybe. I don't even know. Jose, I was hoping for guidance on the call, maybe next quarter. Guidance is tough. Like I was saying here, I don't blame him for the lack of guidance. It's tough to offer it. We wanted it. It would have been nice to have it, but I bet you, if you're long GameStop, you might not have wanted it if it was going to be bad. It did kind of seem like they were talking about headwinds in Q3, so Q3 could be rough. But at that point, we'd be hearing about that in December. You'd have to think, and I have thought that the fervor around the new consoles would trump everything. We'll see. Here we are, September. I know it's up. It's been a double from the lows, which it has been good, but it still seems discounted to me. So we'll see. Yeah, we'll see. So my thinking being that even if it is a rough quarter next quarter, and again, that will be the final quarter before the console refresh, so we shouldn't expect some gangbusters that quarter either, unless it's some major announcement about buybacks, some partnership agreement. By then, we'll know more about Cohen's involvement, I suspect. I didn't think we would get anything prior to this earnings call. I was looking out for filings to see if he added or see what other folks did. I saw Permit trim their position a bit, but it was so small as to render it almost meaningless. It was such a big position in their portfolio. They would just watch this. If you look at Permit is one of the activists who was trying to get vie for the board seats. You know what I mean? So if you go to there's Hesta, his Permit. Wait, why does that show an increase in the shares? That's kind of weird. It shows an increase right there. Kind of weird. It was a trim. It doesn't matter. This what I want to show is this. These holdings right here. If you go here, look at GameStop. It was a huge position in their portfolio. It is now it's only 9% in their portfolio. Is that right? I could have sworn it was more than that. Anyway, if you adjust for this major position, SBAC, that's like 70. Like that's its own position. I don't even know what they're doing with that. But a traditional portfolio management, you probably wouldn't have a position that size. What's it doing, by the way? Just quickly, sorry. What the hell is this? Utilities company. Oh shit! Did they just crush it on their pick? Maybe it was like a 25. Even still, that's a big position. I gotta shrink this a little bit. Wow, maybe they just crushed it in that position. That's a good-looking chart. Anyway, my point was just this, that GameStop was such a big position in their portfolio, especially if you take that position out, that they might have just been normal trimming. Although it was a little bit weird before the earnings release, I gotta say, I was like, what? But it was so small. I'm like, it's not that big a deal. It got them below the 5% threshold that they don't have to report any updated things. But even still, a sale is a sale. You know what I mean? Seemed a little bit odd to me to rebalance at that time. But maybe they were just taking advantage of the run up. And if the stock price does pull back, it's gonna look like prudent portfolio management. You know what I mean? So we'll see. Okay. Okay, so we got that. So what else did I want to just cover here quickly? Just the financial statements quickly. Got any comments? Steve Mazzini, when you look it up, they have an inverse swap derivative linked to the bricks and mortar index. Oh yeah, Steve, if you see GameStop's, yeah, do you know what that ticker is? What the ticker is for that ETF that's short or whatever it is that's shorting brick and mortar? I'd check that out. I don't usually deal in those. As I'm not usually following that closely. I know of them, like those. What are those? The ones that go 3x or 3x up, 3x down, whether they're up or down. They're a mess. One time I tried to read. You ever try to read? I mean, I'm not going to deal in any. I talk about security analysis, right? You better damn well understand what the hell the security is that you're investing in. And years ago, I tried to read about those 3x like bullish gold miners or whatever the hell it is, and I'm like, all right, let me read the actual the document that was explaining what the hell they are. And I read it. I didn't know what the hell was going on. And then it had a line that I really loved. The line was like, and this is because of how they work. It's because they get they get measured at the end of every day. So it was like this ETF may not track the performance of the underlying security. Like however the underlying thing works, it may not be reflected in this ETF, which is true, right? Because it's only on daily moves that those long-term 5-year moves may not be properly reflected in it. But that's the nature of it. And I thought, who has any idea what the thing's going to do every day? Maybe traders do. That's why it's a trading vehicle. But anyway, I had to laugh about that. I thought, well, you're going to invest in something doesn't mirror the performance of the underlying? Just really confusing. Okay, so then what I did was, it doesn't seem, Steve Mazzini, CLIX. All right, I'll pull it up quick. It doesn't seem to have a lot of AUM. All the portfolio has listed as a derivative swap. Oh, all right, I don't know. Let me just see it real quick. Wow, long online short stores, sick. Oh, that's really small. So that's really small. 186, good call. That is a small AUM. It's not. I've seen tiny. Okay, holdings. Let's see. I mean, it's like you said. Oh, it does have some. These are its long positions, right? But we don't exactly know what. Hey, Chewy's in there. We don't know exactly what that short position. Maybe if I pulled it up, but interesting, Steve. I may check this out later. I don't think it's having that big of an impact. Although it could. I mean, I'm so at a loss for words explaining this short interest position that I mean, I'm looking for input. So, maybe. More importantly, even though I think it's an insane trade to put on, maybe it can be, even if it's insane, it still in theory could be unwound seamlessly. I don't know. I just don't know enough. I don't know. Okay, so now if we dig into just quickly the balance sheet, that was the first thing so I saw the balance sheet and then add an extra 42 million, whatever the hell it was. I got to 780 million in cash. Stevens, you just wonder if there are more. I'm with you. Yeah, there could be more, Steve. I don't know off the top of my head, but I'm a little bit intrigued. Maybe I'll try to investigate. Okay, so 780 in cash, receivables. So here's the first thing I looked at. When I saw all this cash on the books, right? And I'm like, and that's high quality asset, right? Who wants to debate about the quality of cash as an asset, right? It's the highest quality asset that you'll find on a balance sheet for the most part, right? I mean, I don't know what the cash. If you dig into the TNQ, you'll see how the cash is held. It could be held in short-term T-bills and stuff. They usually break that out. But here's what I said. I wanted to see, is this a positive? I wanted to see the net. You know, net. Look at Google net. I mean, that's when you take current assets and you subtract total liabilities. And then this is a Benjamin Graham style of investing, right? You buy securities that trade at a discount to their net because that indicates a gigantic margin of safety. You don't see them too often, and it's not the case here. GameStop's not trading below its net. But I love when people are like, GameStop's a zero, this balance sheet sucks, this looks terrible. And then I take current assets, 1380 current assets, 1.4 billion. And it's comprised mostly of cash. Oh no, we got to add in, 1380 plus, I don't remember how much it was. 45 plus 45. 1425 current assets, mostly cash. Sick. Like if it was like 1,400 in inventory, then people would be attacking this, being like, oh, it's mostly inventory. That shit ain't worth 1.4 billion, whatever it is, right? But no one's going to debate 780 million. Maybe you'll say that you need it for inventory. That's not. I don't care. But that's not what I'm getting at. Receivables, small inventory. It's something to be discussed. In a true fire sale of a liquidation, we'd have to argue about what they would get out of this. And then prepaid expenses, as a going concern, these are still somewhat relevant. But if it was a true liquidation, you'd probably discount these. Anyway, so then you get to 1425 in current assets, 1.4 billion. And then I'm like, all right, how much liabilities do they have? This is just current assets. Forget their fixed assets. They still have some property and equipment. Now, some of this will be the sale leasebacks. Some will be the distribution and warehouses and stuff, and any additional assets that they may have, which now they're getting down to it, right? Because they're selling some of their brick and mortars. They have Game Informer. Who knows how much that's worth? But just that name brand itself, GameStop, and I believe that's part of why Ryan Cohen's taken a position, not just the name brand itself. I just mean GameStop itself as the only dedicated brick and mortar gaming specialist that has value. Like, people know GameStop, and it's not really reflected on the books. So anyway, in this case, current assets are super relevant because they don't. It's not like an oil and gas company. They're going to have a ton of fixed assets. You know what I mean? Longer term assets. But nevertheless, take the current assets, subtract total liabilities and forget the leases. I don't want to get into this now, but I don't agree with this, the handling of leases, if you're trying to calculate the liabilities. You know what I mean? Like, these are operating expenses. I've talked about this on the stream. I won't go down that. Oh, it's 9:40. Shit. I need to chug this, by the way. This was a pint. Slowing me down. I'm talking too much. You know what I mean? I gotta pause and drink. If ever I need a drink, I'll just pull up the GameStop after hours. Okay, 1425 accounts, and then subtract total liabilities. But we're gonna do total liabilities of 2 billion, 2023. But we're gonna subtract out the leases. Operating lease liabilities, subtract 476, and we're going to subtract the current portion of operating lease, subtract 219, and you have a positive. I calculate 97 million, which of course GameStop trades above that, so it's not trading at a discount to net. What I was just checking to see is I wanted to see the quality of this balance sheet, and I think you get a positive net. The fact that your current assets fully cover your liabilities, that includes your revolver, all of your debt. Really, that's mostly all they have for liabilities, right? The accounts payables, of course, and accrued liabilities and this other stuff. Now, this is a pretty clean balance sheet. I always like clean balance sheets. I like clean financial statements. They tend to be, I just like those types of investments. And GameStop is relatively clean. But I don't mean there's no risk, but when I see this, you have positive, it's a positive net, just positive. I think, all right, that's partially supports the case that GameStop has downside protection. And that was the first thing I calculated. And then I was looking at book value, and it could be a little bit higher because of a gain on that sale leaseback and so forth. And then what is it? 352 divided by 65. You get $5 in cash. So it only trades at a small multiple to, what is that multiple? 7.35 divided by 5.4. I got 540 book value. Trades at 1.4 times book value. But here's the thing to consider. People might say, oh, it's trading below book value. But consider what book value will be 6 months, 12 months from now. That's what nobody's doing. No one's thinking about the financial situation. Like, this is what I mean. I just need GameStop to be in a good financial situation right now. They're definitely going to survive one more quarter. And they're going to get to the console refresh. And I think that they're going to generate quite a bit of free cash flow. And that book value is going to be significantly higher 12 months from now. And so if we're at this starting point of 540, but we're trading at 1.4 book value today, I think about where that book value could be down the line. It could be significantly higher. And if that were a proxy, it's a starting proxy for fair value. Then it's like you'd expect the value of GameStop to rise as well. And then there's the possibility of reinventing themselves, right? That's the more important thing. But I just mean we got the downside protected. And that when I'm analyzing these financial statements, that's all I'm really doing. I'm just making sure that I got everything covered. And I'm like, all right, the balance sheet is clean. This is simple. This is sick. They're setting themselves up for success. This looks good. There's really not much else to take. The decline in inventories, I interpreted this as they're doing a good job, and this is why they trumpet it in the press release of improving working capital management, trying to sell these down, trying to prep for cleaner's maybe not the right word, but higher quality inventory. So this is the thing. Now when they get to the new consoles and they're building out their inventory, if people are going to start ripping that to shreds, oh, that inventory figure's suspect, you know? I'd be like, this is all new consoles and new video games and stuff. Like, you sure about that? Maybe, and it's at cost, right? It's held at cost. So I'm like, then let's have a debate about that. How shitty is this inventory when it's going to be all new stuff? Mostly new stuff. We'll see. But and then people will trade in some stuff too, so it's not all new stuff. You know what I mean? But it's probably going to be higher quality. So so I like the balance sheet, and then I pulled up cash flow statement. Who cares? But I will get to the income statement if we have time. 9:45. And again, Steve, you're the man. Thanks for doing all this. It's fun to have other value investors to hear from. Cheers, Steve. I agree. This is value investing. It's a lonely, contrarian. It's lonely everything, right? There's no one to There's no one to talk to. So I agree. This is like fun to just chat about this shit. Because we can have fun together talking about it and sharing ideas and thesis and stuff. That's the thing. I feel like value investing, like, it can be more fun. In just research and self, I say that in one of the videos. Like, it can be more fun. It doesn't have to be this boring, lonely stuff. So that's what I'm hoping to do with the channel. We'll see. I'm testing. I'm experimenting. Let's see how it goes. Okay. So this is this is 6 months. I got 3 months in here, right? Here we go, 3 months. Okay, so the net loss, I don't even care about the net loss. All right, depreciation. See, now they're getting down. Look at this purchase. Look at this. I didn't notice this. They only fixed capex 11 million. So that's really small. Can you imagine a company of this size, revenue-wise, 6 billion in revenue or whatever it is now? Now it's going to be a little bit smaller. They only spent 11 million, so it's a little bit of a. One would argue this is a little bit of a concern if you were thinking because they're reducing their investments in the company, lower capex, they may not be able to generate as much revenues and free cash flow down the line because they're not investing in themselves. So there's the difference between maintenance capex and growth capex. You need to ensure that you have the maintenance capex covered just to keep the business flowing. But I suspect what they're doing is they're getting ready for some growth capex. And this is the thing. This is part of the new narrative is that whatever those growth initiatives are, that's what they're going to be focused on. So they're kind of like, we got to get to the console refresh. But if you saw this for another company and you saw really low investments in their business, it should be not a red flag, but a yellow flag. Get your attention. Be like, oh shit. If they're not making sure they're remodeling their stores and keeping the stores clean, like the maintenance capex stuff, if they're not even doing that stuff, they got to make sure people will still want to shop there and all that. Got to have that covered. But geez, I didn't notice how small that was. 10.9. What's the 6 months? Wow, look at this. So this substantiates claims that the management team they're laser focused on this shit. They are laser focused on this positive free cash flow, strengthening this balance sheet and prepping for this is the thesis, prepping for a transformation. This is what they're gearing up toward. Look, this is a very, very small reinvestment in the business. And if it weren't for this, if this balance sheet weren't super fat, like I'd be a little bit nervous, like how long can they keep this up? But I'm really impressed. Let's see if they thrive over the next 12 months. We're gonna look back at this capex and be like, that was some really impressive stewardship right there. Like to only invest 20 million in capex, you know what I mean? Like that's not easy to do. Holy shit! Over 6 months. Over 6 months. So there's very little because they weren't doing much testing. They weren't doing much of the Tulsa testing this time. That's really small. It's impressive. It's impressive, but still, it's just something to look out for. And then the 52 million, the property of proceeds from the sale. That's sick. You like to see this for a company that's, well, as short as this is, where people are really betting against it, just because it means levers, boom, 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 boom. If nothing else, just take away that they're doing something, they care, they're taking actions, the non-core stuff, and then you dig in and you be like, all right, they're trying for this. But then you see, okay, so anyway, I brought that up because the depreciation, just a rule of thumb, it varies for every business and every industry. This depreciation should be roughly in line with what that capex is, roughly. You know what I mean? Like if historical depreciation is roughly if it is a proxy for maintenance capex, then if you see capex that's meaningfully below this isn't that much, I guess. But then that should be like, wait a second, are they investing enough in their business to maintain this? Just a heads up. Goodwill impairment. How are they? Oh, asset impairment. I was going to say there's no goodwill left, but asset impairments. They're still doing some minor asset impairments. Remember, they're always going to have inventory obsolescence. That's the thing. People will rip apart the inventory. I'm like, they take charges against this. Pull it up in the balance. Pull it up in the 10Q and the 10K. They have inventory obsolescence charges. They do that. That's not to say it's always accounts for everything, but just a heads up. Wow, so not that much write-downs, not that much impairments. Interesting. I'll look at last year. I think that was goodwill, huh? Yeah, pretty sure. All right, stock-based comp, real small. This is all noise. This is really, really small. Look at the gain. Sorry, this is where I saw that 10 million gain, and so I suspect that they'll probably get a gain. It's small. In the grand scheme, it's small, but still, you don't want them to, if you can sell assets at a gain, that's a good thing. It means that they were reflected on the balance sheet just a little bit smaller than they're actually worth. All else equal, you want the gain on there. But it's not going to make or break whether or not GameStop's profitable. Okay, so you can see like a lot of this free cash flow generation is from the management of the working capital. No doubt about it. Look at this, the fat inventory. They're drawing down the inventory. Remember, this is a cash flow statement, so this is saying that we got to add this back. So it's resulting in more cash flow because they weren't replenishing the inventory, but they will in time. So this is why with a company like any seasonal brick and mortar retail, right? You got to take those averages over a 12-month period, right? This can be distorted both ways. It can be distorted upward. It can be distorted downward too. Some people I felt were distorting GameStop's free cash flows downward earlier in the year, and now here they are crushing it. So if you're shitting on them a couple quarters ago, now you need this goes with it. But I really don't want to focus too much on this because of what I'm talking about. You can see the accounts payables too. So that was getting bid up. The accounts payables were going up because they weren't paying on my own. And then what is this? The operating? Oh, that's just the what is that? Operating lease right of use. Those are the leases. So you could just see. You could see why, what can be, and look at it relative to last year too. It's like some of these were being drawn down in this same quarter. This is why quarter over quarter is important to do. Because usually, especially for a seasonal business, they're doing similar things in each quarter, treating these things similarly. Yeah, so the business, it's important. So I'm not so sure that they'll going to have robust free cash flow next quarter, right? It could be a bit of a cash burn. Hopefully they can try to break even. That'd be good if they could break even on a cash flow front. It'll be tight though. It'll be tight because they'll be building inventories and stuff in preparation. But I think at this point, I feel comfortable enough with this balance sheet. Like I was really curious about this balance sheet because we were still 6 months out. We had a balance sheet that was from June, and I'm like, I hope this balance sheet is going to look good because then we're going to be only a couple months away. But now I feel comfortable that even because I kept on thinking there could be 2 really shitty quarters cash flow wise. And then I think, they got to keep it together for one more quarter. Now I feel good where the balance sheet is right now that they could manage a shitty third quarter. I talk about, someone mentioned headwinds in Q3. Not ideal, not optimal, but okay. They have the balance sheet to sustain, even if they had a cash burn of 100 or 200 million. I don't want that. I'm not forecasting that. But I think as a value investor, I think, okay. We're in an okay position. We're going to get there. And then thereafter, then we'll see. Then we can debate about how much free cash. I think they're going to generate way more free cash flow than is being priced in, but we'll know soon enough. We don't need to speculate on this. This quarter is more about how they do kind of right-sizing stuff, and it looks like they did a good job. And then on the financing side, they repaid part of the revolver, proceeds from the French term loans. Boy, you don't see that phrasing too much. French term loans, just the management of their debt situation, real all small stuff. The big thing was the repayment of the senior notes. I like that though. You know what? They got all that cash in the books and they paid off some of their revolver. I thought that was sick because they had 135 last quarter, and so you had to factor that in. It counts as debt. And then that's it. So what did you see? The increase in the cash. So I thought that was huge, 175, and we know it was even more. It was over 200 million, that increase in the cash. So sick. Yeah. So and then I can pull up the income statement just super quick. But what the hell is there to take from this? The 942. Excuse me. Cost of sales. We talked about SG&A. So you can see, and we know gross profit got hit 400 bips. We talked about that. What the hell is this? Oh, 0.9. Sometimes I get these rows mixed up. 0.9. Asset impairments. See how clean this is? I really like the clean financial statements. Interest expense 7.5. Yep. And I expect that to drop as they pay this stuff off. You know what I mean? Like it'll be paid off. That's what I mean. We talk about all this cash and where their financial situation is going to be 12 months from now. I mean, shit, they could have all this stuff paid off. The revolver, all of their debt, and they could even exhaust the buyback authorization looking out 12 months from now. And they could still have a shit ton of cash on the books to reinvent themselves. You know what I mean? I know right now it's September. It sounds like conjecture, and people might interpret it as like bullshit, but this is the thing. You can really only know if you calibrate. Make a claim, make a bold claim even if you want. And this is why it's important to track. I talk about a big part of this roaring kitty process is tracking, just keeping an eye on stuff. keep an eye on the stocks, how they do, other people's analysis and what they're saying about a stock, and then calibrate. How did they do? How did the stock perform? Did you make a claim on it? Test it. See what works. See what didn't. Was the analyst was an analyst's opinion legit, or did it fall apart? It's okay if not every thesis has to work, but this is why it's important to do it over time. Because it has compounding effects. So we'll do the same thing here. We'll look back 12 months from now, hopefully, and we'll be like, yeah, shit, they were set up. This balance sheet does look clean and slick, and they're in a good position to reinvent themselves. And I'm sure by then we'll have a better idea as to what the hell the plan is. You know what I mean? But right now, the upside optionality is still here. Everything's still good. Doesn't mean it'll be up tomorrow. You know what I mean? This is all about that long-term thesis. You know what I'm saying? So, and this still looks okay. And so they got the 10Q out too. I didn't pour over this 10Q. There could be, sometimes there's some nice tidbits in the 10Q. I remember, first of all, the share purchases will show up there, and then like the jet was, I think you saw it in the 10Q before they even talked about it. I forget off the top of my head. So I'll look over this later. I didn't get to it yet. They just filed it just before. But if there's anything in there that I should take a peek at, you've already seen it, let me know. Otherwise, I'll be looking through this in time. Again, I don't do this for every stock. I can't do it for every stock. I do it for the ones that that I have a sizable position in, and that's what I often recommend. You don't got to do it for everything. It's important to. But I think it's helpful to track a lot of stocks at the same time. So I mentioned in one of my videos. So I could scroll down. I got a shit ton of stocks in this Reinvention portfolio. Again, not recommendations, anything like that. But this is way more than I usually have in the Reinvention portfolio. And this is because it was the nature of this year. It's a little bit of a divergence from my normal strategy. I'm usually much more concentrated, but because of everything that was happening this year, I'm just like, it's just weird. It's like this feeling. I've got to diversify more. It turned out to be really good because a lot of these are up. A lot of these are up a ton. Not all of them. Some of them are duds, but a lot of them are up a ton. And I said in one of my videos how this is perfect for the stream though, because you can see into my style of investing. Checking these out. Some of these are even small positions. Actually, we're still in actual positions. You can see how small they are. They're small, but if we keep on going, then they become real small. They're like just not. Where are we at? 100%. How many positions I got now? So once that you can see, this column right here is the portfolio percentage. Now, when you're at 0.01, this is just a position I'm keeping in the portfolio, a nominal position to track, because it was, oh shit, how many I got in there? 180, 181? But actual positions, I think I'm under 150 right now. Oh, I'm down to what's that? Oh, I'm down to 125. That's good. Anyway, this is a ridiculous number. This is too many companies to track. I'll be the first to tell you, this is absurd. It's just because the market forced my hand, and I'm like, there's a lot of cheap companies here, and to be honest, I don't know which ones are going to bounce the most. And I wish I did things a little bit different. It was a great learning opportunity, and that's why I hope to share some of my insights on this stream. But in one of my videos, I kind of critiqued my process a little bit, where I wish I did things a tad differently, kind of invested in more garbage, which I know a lot of people used it as an opportunity to buy higher quality companies. And here, just a little bit of background, here I was trying to look for more garbage to invest in. And as it turned out, right, as the market turned out, it turned out to be a good decision what I did. But you never know. Like, it could have turned out, like, the market still could have been in the tank. Maybe the market's headed back in the tank. Anyway, this was good for the stream because I was able to have so many different positions in the portfolio, and so you can kind of see. But this will probably be trimmed, and this will hopefully cover more companies in the stream down the line. I expect the GameStop news to settle down a bit, right? Maybe once the short interest cleans up, but I don't even know. I don't know. Okay, did I make any notes about other stuff I wanted to? Yeah, hopefully we'll get some more insights too in the digital revenue share. They're probably going to get some insights on that front. Hopefully we'll get some insights on that front in the coming months. In any type of subscription model, like all that stuff, I hope we get some more information on that stuff too. I can't imagine when we're going to get a new press release and what's going to be disclosed in any time soon. I'm not really sure, but keep an eye. Something to keep an eye out. Let's see the price reaction to this press release, and what I think is this press release is a good press release if you're long. And it's not a bad enough press release if you're short. So I'm kind of let's see how the market reacts to this. Like I said, my prediction was that it was going to be flat when I first read it, and then I saw the price action. I'm like, oh, it's down. And then I saw the VWAP. I think, it's not down that much. This is noise. 2 million shares, that ain't shit. And then let's see how it ends the week. But let's keep an eye out for filings. Let's see if there's any update, if anyone takes a position or trims their position or sells their position. And then in the coming weeks, especially if Cohen has anything to say about it. I'll be keeping an eye out for that stuff too. But right now, I'm keeping an eye on the price action. I know that sounds weird for a value investor, but like if this thing bounces off 666 or 650, I got to say that's bullish on the technical analysis, right? I know that sounds crazy because value investors, we don't think that way. But as more time passes and the chart substantiates itself, it's bullish. I don't know what else to say. But anyway, check out my tweets too, because I say some things about like a whole bunch of the different variables that are kind of supporting why this backdrop is a little bit bullish right now. But this is all a test. Let's keep experimenting with it. Let's see. And if I back out to the weekly, what do we got on the weekly? Oh, yeah. Oh, yeah. See what I mean? It still looks good. Let's see where it ends the week and stuff, too. Supposedly, the weekly and the monthly charts, those are more telling. But, oh, shit, 10. Okay, 10. Don't tell YouTube I went over. Remember, I always say that. Don't snitch on me. Don't snitch. I went over, but I know I'm not supposed to go over. Cheers to everybody. Thank you so much for tuning in. I hope it was great to chat GameStop after an earnings release like this. Hope you had some insights. I know I had some insights just talking through this stuff. Like I said, it's super helpful. So I appreciate the feedback on the channel and everything. That's always great stuff. Now I got to enter chug mode. Usually I try to leave like one sip left. I try to mentally and like time that, but chug mode. Thanks, everybody. Oh, who do I mean? Oh, Ryan King. I'm really enjoying this as I'm just starting to dip my toes in investing beyond normal retirement investing. Thanks, Ryan King. Cheers, mate. Appreciate that. I'm happy you enjoy it. Do you have any advice on where to go learn this stuff? The Roaring Kitty YouTube channel for starting now. That's a good idea. Cheers, Steve. Cheers, Steve. That's a good idea, Ryan. Maybe I'll come up with some resources to share. I do have some insights. Nothing off the top of my head right now to share, but I'd recommend value investing stuff. It's a good starting point, just generally. I know everyone always starts with Buffett. Everyone always starts with the Buffett, right? And then you move from there. I'm not so much of a Buffett style, as you can tell, but that's often a good starting point because obviously that guy's brilliant and he has a lot of the good insights for new investors. But let me think about something. Maybe I'll compile some resources for folks, try to point you in the right direction. I don't have anything handy, but good question, Ryan King. I'll get back to you. But thanks again, everybody, for tuning in. I appreciate it. Hope you had fun. Keep your eye on GameStop. Let's see how this shit unfolds, and I hope you have a nice rest of your night. And I'll see you on Friday, all right? All right, peace out, everybody. Check out the Roaring Kitty outro video. Hope you enjoy. All right, later.